regarding, how to scale into a trade, how to build a position. One of the guys actually in the group, he was doing that. He has created a really simple strategy that enables him to do that using predominantly fib levels. I don't know if you guys know Rob. He shared some of his bits and pieces. He has a. I'll actually share his. Where is it? I'll share his YouTube vid. You can have a look at it. He's done 2 parts to it as well. And the reason I like what he's doing is because he's kept it really simple, and he's passed the FTMO challenge as a result. Oh, didn't mean to do that. And I really like the fact that he's managed to do it. And what makes it even better, and better than most traders, better than me, better than most out there, is the fact that he has. No, I'm a beginner at this. Yes, everything that makes me a better trader. Yeah. Stay on mute for now. Too much noise. Okay, I see his videos. It's simple, but it seems a little bit unorganised. Well, I think when you watch traders on YouTube, you have to kind of give them a bit of leeway and be a bit flexible, a bit generous with how you judge them, because they're not marketers, they're not presenters, they're not natural at it. I'm sure their videos will get better as they learn new tricks and how to present, but they are, traders first and then everything else second. So if you can extract information from their analysis and from their strategies and from their breakdown, great. If you have questions, the good thing about these guys is that they're very humble and they're very, if you have a question for me, I'll do my best to answer it, and so you get in touch. And generally, these guys have their own contact details that they tend to post and share within their videos. And if they don't, you can send them a message on their YouTube video underneath and ask them to get in contact. But yeah, I'll share his thing for anyone who hasn't seen it, and then I'll answer those questions. Let's see, where did he put it? I think he must have put it under trading. Scroll up. Is that it? No, that's not it. Right. Scroll. Oh, here it is. Forex trading psychology and routine. So he's put one about the routine. That's quite good. I like that. Let's get that. Where's the best place to share this? Maybe under the chat for everybody. For everyone, here we go. Chat to everyone, and put it in there. That's the first one. That's to do with psychology. I think that's probably providing a bit of structure in terms of how he plans himself out. I mean, plans his day and looks at how he does things. And then his strategy it encompasses the fibs. So he'll use the 38.2, the 50%, the 61.8, the 76.4. And the good thing he does, quite basic in how he does it, straightforward, which is really good. It's a simple strategy. Is he scales into the position, putting in smaller positions at the lower end of these fibs. So he'll take a risk at, say, the 38.2 or the 50%. He'll put something on to short it back down again. If the market's in a sell-off, so like here, we can use gold as an example. We can put some fibs on this, and he'll use, say, a 15-minute time frame, a 1-hour time frame. He'll use intraday time frames. Those time frames are good for day trading because they're showing you what's happening now, as opposed to maybe 4-hour or daily. I can't remember exactly what else he does and whether I'm being accurate in this, but I know the gist of it is that he'll put a small position on here on the retrace. Maybe add another one here at the 50, or he'll wait at the 50 and then put it on, and then add a bit more at 61.8, and then if it gets as high as this 76.4, then he'll add the bulk of his position. So scaling maybe like 0.5%, and then maybe put, I don't know, 1% here or something like that. So his maximum risk is 2%, and his stop loss is generally just above this these retracement levels. So he'll put it somewhere like that. So yeah, watch those videos. Did I put the other one in there? Let's put the other one in, because that is really good. I like how he does it. I can relate, and it made sense to me. It may not make sense to you, but then just ask the questions. But that's how to scale in. He covers it quite well, I think. So anyone who's been training a little while may understand what he's doing and how he's doing it. But the best part of this, the reason I big him up, is because he's only been trading 2 months, 3 months. That's all, and he's basically been working with us, working with the groups, working with everything that he's been exposed to. He took some time out last week or the week before, and I think he's just processing everything, and he's come back to the table, and he's put it all together, packaged it up in a way that works for him. And I just think that's amazing, and to do it in a few months. And so he's passed the first part of the challenge, the 100k challenge on the FTMO, and now he's looking at the next. He's already gone to do another challenge. I just think that's brilliant. Straight away he's doing another challenge. I love it. I think that's just progress in motion, live. And yeah, I mean, people like that, you want to be surrounding yourself with people like that just because of the sheer motivation. So you risk 1%. Yeah, I think, did you say this yesterday? Someone else said stuff like that about 1% risk. Just with these FTMO challenges, it's a really good indicator in terms of how to trade. Now, you think you're going to trade for the long haul, so you want to be a trader for the next 3, 4, 5 years. So in order to achieve longevity in this game, what's the first thing that springs to mind? For me, it's don't go hard. Don't risk more than, bite off more than you can chew and miss too much. Just risk a little bit by little bit. And the problem there is that you're going to risk a little bit, like 0.5%, and you're going to be like, it doesn't feel like it's enough. I'm not making enough money. And that's just your emotions talking, and greed factor. And it might be also the fact that you're doing an FTMO challenge, which requires you to achieve 10%, which is a huge amount in a month, which gives you about 20 odd days, working days, trading days in a month. It's quite a tall order. But if you break that down, 0.5% a day over 20 days, that's 10%, isn't it? And you know that every week you're presented with opportunities, your high probability opportunities, bread and butter opportunities. It's a never-ending buffet, this game. You'll be presented every week with some good setups where you can make 2-3%, maybe risk 1% and going a little bit harder. So I would say just cruise along, risk 0.5%, don't do any more than that. Risk 0.5% to maybe try and make 1%. So 2-to-1 risk to rewards, that'll make you feel better. Even if you cashed out half of your position at a 1-to-1 and then left a bit on to run, you're still then banking profit that may give you anywhere up to say 0.5%, and then anything extra may be giving you 0.75%, 1%. And just do that as a process, a very steady process. That means then anything that you have above and beyond that will just contribute towards that 10%, and you'll get to the 10%. And the good thing about that is that you're learning consistency, and it may take you the full month to get to 10%, but that's teaching you how to be slow and steady and consistent. Because then month 2, month 3, the 60-day part, the verification part, you only need to do 5%, and then you have twice the amount of time. So if you carry on doing the 0.5% to 1%, that's cool. And what that's doing, that's teaching you best practice. Because after the 2-3 months, that's the easy part. Taking a challenge and learning how to do it, that's the easy part. The hard part is once you get the money. Maintaining, creating a buffer. If you get 100k and they give it to you and you go live, then you want to have an understanding of how to trade. So spend the 3 months learning how to trade the FTMO challenge, because the FTMO challenge it has certain stipulations which are different to trading for yourself. And in actual fact, I kind of like it because it's giving you some structure, and it's forcing you to enforce your rules, your risk management, your structure, which you need. You need that structure and foundation, and that will serve you moving forward. So that in 3, 4, 5 months' time, you've managed to grow your account and make money, 5% a month, or 10% a month, or 7%, or 2%, whatever it is. Don't withdraw any of that. Keep it in there so that your account goes from, say, 100 grand to 110 or 120. Then in month 2 or month 3, then look to skim the profit, withdraw. But build that buffer up first. That way, if you have a bad month, you've got that money to fall back on. Say you've got 120 grand, you've got 20 grand of play money that's your cushion, that's your buffer. You can fall back on it. And the reason I talk about the FTMO is because that's the same principles that you should be applying to your trading, even just trading your own account. What do you think? It makes sense, doesn't it? So
Yeah, it does.
So yeah, don't feel nervous about risking 1%. If you do, then go back, because 1%, that gives you 10 shots, 10 goes. That's a lot of goes. Do you think you're going to lose on all 10 goes? Ask yourself that question. Do you think, as a trader, you've got 10 goes, you're risking 1% each time, so it gives you 10 attempts, 10 trades that you can place. Do you feel, whether it's true, delusional, not sure, what's your gut telling you? Do you feel you're going to lose 10 times? Don't answer it like it's a simple closed question. It's a simple yes/no question. Just answer yourself that. Don't start overthinking it. Say, yeah, but I might lose 7 of them or 6. Forget all that. Just, do you think you're going to lose them all? Yes or no? First question you ask yourself. If the answer's no, then move on to section 2, stage 2, and say, okay, of these 10 trades that you take, how many do you think you're going to win? How many do you think you're going to lose? How do you think you're going to fare? Well, you can't answer that, can you? Best traders in the world can't answer that. They might feel more confident and they can call upon experience, but market conditions just could go sideways and just go really, really bad that you can't trade it. It's not tradable, and you know what I mean. It could be, there's so many variables and factors. So that's, you're hypothesizing. It's all not, you don't know the answer. But the first answer, you could probably answer the first question. You could probably answer with some certainty. Will you lose all 10 times if you risk 1% and your maximum drawdown's 10%? Do you think you're going to lose 10 out of 10, or do you think you might win a few? I think most of you would probably win a few. If you feel that you're going to lose them all, then you shouldn't be doing a challenge. You shouldn't be trading. You should have a demo account. You should be going back to basics. That's a simple way of answering that question. You have to ask questions of yourself because nobody else will. You have to be like that. You have to be really on point with everything that you do. You have to really look yourself in the mirror and be critical of what you are doing and how you are doing it. You have to do that because nobody else will do this. You want the luxury of being self-employed and being your own boss. So, with that comes responsibility and accountability. You can't blame anybody else for your actions. Wow. That sounds good, John Doe. Whatever you're watching. Using your hair as a mask. Yeah, honestly, guys, if you have your mics on, it picks up on all the external noise.
Hair as a mask, isn't that a beard?
I don't know. I've got an egg and bacon bagel here. I'm going to eat it, and I'm going to mute my mic. You guys got any questions? I'm going to record. I am recording this, so we can review some of it. I'll pause the recording whilst we're waiting because I don't think it's just going to be pointless otherwise. So we just pause it here. And with gold, we were looking for the break of support at 1850. We got that. That's why we got in here, because with banks, institutions, they need to take a position up from the beginning. They're the ones that make this move happen, make it possible, because of the volume that they're bringing to the market. And So when they start moving, like here, often if you're not already privy to the setup and the price action, price will start moving without you. If you are sat there watching and your plan, or you have a trade plan, you think, okay, if this sells off, I'm going to be jumping all over this. Then yeah, I mean, as it goes down, you might be able to get on this and start capitalizing on this move down. So 2 ways to play it: get in at the start and wait and do this on Friday and see if it kicks off over the weekend because of some news, or some positive news coming out regarding the vaccine. That's why this moved, because it's positive news regarding vaccine. So
Well, would it give the U.S. investors more certainty and cause them to sell off safe havens like gold?
well, the banks, the institutions are holding gold all the time, but you can appreciate that during uncertain times, their holding of gold will increase. And also bearing in mind that we are testing the previous high from 10 years ago, the last recession, 1921, then of course we are going to see some reaction up here. It went up and it took out the previous high. There's the previous line for the previous high. If this is a monthly chart, a monthly time frame, so let's have a look at this monthly TF. Let's scrunch that up, drag it across. That's what it looks like. That's the move. It's a great monthly candle, great reversal candle. There's some momentum shift in that candle. That monthly candle speaks volumes. This is why when we do analysis, you will often hear people say to do top-down analysis, which basically means start from your highest time frame that you have. For me, it's the monthly, it's the weekly, it's the daily. On these other charts that I have here, I can go to quarterly, I can go to yearly. I do look at that every quarter. I look at my quarterly charts every quarter. Every year, I'll look at the year, see what's happened. This is the quarter chart that we have. It's interesting. Let's just fix that up. There we go. So yeah, that's the quarterly, and you can see quarterly we've stabbed up. We've made a new high. We tested $2,000. That's what people were talking about testing. That's what we wanted to see. This is the same sort of chart that we're seeing on Bitcoin, where it's gone up to, again, 19,000 3 years ago and then fell over. So we're saying it's going to go up to 20,000 and test. Same sort of price action, really. Same price action. This is what I was thinking with Bitcoin as well, to test and break price action. We can look at Bitcoin as well if you guys are interested. But yeah, same price action. So I was thinking 20,000 for Bitcoin, and then after that, who knows? Certainly profit taking on the way up. But yeah, this is what's happened over the last quarter. And then this quarter we've come in, which would be September, October. No, it would be October, November, December. Sorry. Yes. And so this is October, this started, this moved down. So if we drill down now to the monthly. So top-down analysis. Start from your highest time frame. Look at the bigger picture. There was divergence down there. I forgot to share that with you to discuss it. Did you see the divergence? Which we could talk about divergence as well. It basically is a simple case of knowing that this price is going up here, we're bullish, the markets are rallying, but down here your indicators like this one here, so this is a volume indicator. This is telling us how much volume is coming in, how much is being, how many buyers are coming in, and not so many buyers as individual buyers, but if there was only 10 buyers, how much money are they bringing, how much are they investing, how much are they putting in, what position size are they taking, how many hundreds of millions of dollars are they actually pumping in to push this price up, how much investment are they basically taking, how much of a stake in gold are they actually taking. So that's what we use, and then we start to look for divergence where price is still going up, we're trying to go up, however we go back to this quarterly. It's good to look at quarterly because no one ever really talks about the higher time frames. But these are the time frames that the banks look at. Do what the institutions are doing. They need to look at this stuff because they need to forecast. You know, they're already talking about what they're going to be doing for next spring. So they're already like 3, 4, 5 months ahead. And of course, the traders, they get paid a bonus for this year, which normally gets told. They're normally told what the bonus is maybe in January. So it gets paid at the end of Jan in the pay packet or February pay packet. And often their bonus will far exceed their basic salary. So if they're on a 50k salary, you're looking at, as a junior trader, just coming out of university with a banking degree, if you want to be a trader for the banks, go and do a degree in banking and international finance and get a decent qualification, a decent result. And then you can go and work for a bank. A junior trader, you'll be running around like a headless chicken, doing absolutely everything, working all the hours, getting all the shit shifts. But you'll earn. You'll learn and you'll earn, and your basic might be something like £35,000, £40,000 if you go and work in London for a bank or a hedge fund. And that's what you'll get. But maybe year 1 your bonus might be the same as your salary, like 30, 40k. But year 2, year 3, you're looking at 100k. And then as a more senior trader, top traders, they could be earning something like 10 million. One guy earned 19 million a few years ago as a trader from the bonus, from the commission, because of all the trade and all the profits that he'd brought in to the bank or to the hedge fund that he was working for. So yeah, this is the stuff that you want to look at and explore and understand. Always have one eye on what is going on. What's the bigger picture? So this is gold. This is what's happening. This is why we've been shorting it. It's come off the highs, came off 2000, and it consolidated. And then let's have a look at the weekly. And let's pull the weekly up here. But yeah, look, the monthly here, we've got a lovely reversal candle. And that was a couple of Mondays ago, wasn't it, with the vaccine announcement? So that's when everybody saw it coming off that 50% retrace. So it went up to this 50% of this range, this move. Let's have a look. I even had a signal to go short. What week was that? That was week 45. Yeah, that was the beginning of November. So we pumped up. If I just show you this quickly on this chart. I want to plot some fibs so you can see this. It retraced 50%. So you find the highest point, the lowest point of that range, the highest point and the lowest point. There you go, the highest point and the lowest point. People ask how you plot your fibs. Look for the highest level, the highest place, and look, it's tested once, twice, 3 times. Look for the lowest area, and there you go. So you can see it went up to about 1960, and with my guys, we were trading bullish momentum. We were going long with gold, having rejected off these lows up to 1960 as an area. And then the week after, on the Monday, this is what happened on the Monday. It collapsed, didn't it? And off the 50% fib, so it retraced halfway. So for me, this is why I was saying, okay, if it's going to break 1850, now's a good time as any. Don't you agree? When you look at it on the high time frame, look at weekly. So people ask me, how did I know it was going to break? I didn't know as such. I could say, yeah, I'm the market, so I know everything. No problem at all. Yeah, it's cool. But realistically, and in all seriousness, it's just about looking at what's going on fundamentally and how that links in with your technicals. So technically, we've retraced 50%. We're coming off the highs, and we're testing the lows again. It's tested once, twice, 3 times. Usually, when things test 3 or 4 times, you'll know. It either breaks or rejects. You've given it enough time to test a certain area of support or resistance enough times. So for me, as a rule of thumb, 3 times is good. Tested this area 3 times. So 3rd time's a charm. Knocking on the door, we're going to see if it's going to break. So let's take some shorts and put some positions on. Let's speculate on that possibility, which has just gone up in terms of high probability. How much of a probability is that going to be, the fact that it's going to happen, that it's going to break, So we're playing probability all the time, aren't we? It's a probability game. If you're too busy scalping, you're not looking at anything in terms of probability because everything's going super fast on a 1 minute time frame, and you're not really, you're not really paying attention to what is going on unless you do look at the higher time frames and appreciate that we're in a bit of a downtrend. And so if you're going to scalp, which is what I've been doing on gold the last few days, I'm just scalping every time it pops its head up. People are saying, okay, everyone's saying, gold looks like it's bottomed. I'm getting messages like that, and everyone's so quick to jump into the reversal. It's like, well, this thing's just dropped a hell of a lot. Okay, give it a chance to find some support. A few days to actually turn and go long before you start jumping in, taking it long. It goes down one day, 700 pips, and straight away people are trying to take longs on it. It's like, okay, yeah, why do you need to do that? That's like no heroics. You want to get in from the beginning. Why? It's not necessary. That's more ego trading than anything. Do you have a strategy for that? How do you call the tops and bottoms? How do you know when it's bottomed out or when it's topped out? How do you know? I have a divergent strategy for that. So that's what helps me. It helps me understand when stuff's overbought and oversold in conjunction with this. So you see here on a weekly time frame telling me it's overbought, overextended is powerful because it's a weekly chart. It's higher time frame analysis. It's not a 1 minute. It's a 1 week, 7 day analysis. So it's giving me a really high probability that this is going to, in conjunction with the volume that's been diminishing, going down. We did have some divergence here, and then we had a pump up with the volume, which took it up, broke the previous structure, previous high, which was a long-standing level, 1921. It held for 10 plus years. That's massive. Now we're using that as our resistance to bounce off. So if I drill down, in conjunction with a few indicators and a few toys that I've got with my algorithm software, it kind of just helps. Okay. David, I think you need to mute your mic. You got feedback. Thanks, mate. And my voice sounded very strange. Sounded like an alien. So yeah, this is where we're at with it. This is gold. This is what was telling me fundamentally. Banks don't need to hold so much money. Do they want to take some profit? Well, if I was a bank, this is as good a place as any to take some profit. Right at the top, right at the previous high. Vaccine news has just come out to say it's good news, guys. We've got a cure. Whoa. The world's going to be cured. All right, cool. Let's go and adjust our portfolio. Let's go and see our portfolio. Let's reevaluate where we have our money invested. Let's see if we can cash out somewhere. Okay, gold's the first one. Let's take our profit off gold because we don't need to have such a big holding. So if we've got 100 million invested in gold, let's maybe reduce that down to 50 mil or more so 30 mil and take 70% of our holding off gold. Because things are looking good. Do you know what I mean? That's what the analysts do. That's what the banks do. In conjunction, working alongside the traders, and that's how you think. And you're running it as a business, right? So you've got all this money on the table, this profit. Why are you still holding longs on gold? They've just announced that things are good. Then they could argue, okay, look, I tell you what, let's take our holding, let's let gold drop, let's let it do its correction, and then we'll get in again. Because that's what they'll do. They play the game. They'll get in again once it drops, once it gets lower. And they'll need a catalyst for that. So another thing, the catalyst being fundamental news. So the catalyst that caused gold to sell off was the good news that we had with the vaccine. So gold was correlated with the stock markets. If you look at the indices, the Dow Jones, the S&P 500, the Nasdaq, they rallied. They were making record highs. They were making record highs this year as well because, where else are you supposed to put your money when the Fed and the institutions, the banks, the Bank of England, the big boys are dropping interest rates to nothing. If you put your money in a bank account, you're not going to earn anything. They even talked about, they threatened to do negative interest rates, which means that if you had money in a bank, you'd actually pay the bank to have your money there. So imagine how many rich people are sitting there going, "What? No, I'm not paying. I want to make money. I don't want to lose money." So they start looking at diversifying. So you start looking at the stock market. So people are saying, "Why are the stock markets going up when we have this pandemic, and it's all bad news?" Well, because we've got so much money out there in the world. People are no longer doing this thing where they take the money out and put it in a safe in their house, or have a vault under their house, or they don't. Not everyone lives in Switzerland, and not everyone's old school like me, or not like me, maybe old school like people that I used to know, older generation, where they would have money under their bed. People, you hear about people saying, "Oh yeah, keeping money under your mattress," as a joke, but people used to do that. People still do that now. You've probably got some 70-year-old, 8-year-old that you may even know of that, he probably keeps money under his mattress. Doesn't have a safe. You know what I mean? It's just that's people's attitude to money and what they do with it. It's quite funny, but how times have changed and how they haven't. So years ago, you would have expected the stock markets to drop, but in this day and age, people are very quick to go online, and everything's done online, so it's very quick. And they said, right, let's buy into something. Let's go and invest in Tesla. Let's look at diversifying. And so yeah, so that's why we've had these moves. And fundamentally, gold is no longer urgently required in terms of having such massive holdings. So the banks have dumped it, and you've got to appreciate it's like first come first serve, because who the banks sell to? The banks sell to other banks, other institutions around the world. So this is why it takes a little bit of time. So you see it dump, and it's like steering a Titanic ship. Whereas we are retail traders, you imagine we're like a speedboat. We're like a little dinghy. We can, like a jet ski. We have that flexibility to jump in and out of the market as we see fit, and have that great work-life balance. We can go in each day. we can make some money, and yeah, and then just be done for the day, and then go and put our feet up. Whereas these guys in the banks, they have to move their money around, and they have to constantly make big decisions which require big volumes of capital being moved, hundreds of millions. And so that's why you can sometimes look at fundamentals and anticipate what is going to happen next, what is likely to happen. So November was a very strong month for me, because I knew that with the vaccine news we were going to 30k on the Dow. So I traded the crap out of that Dow, taking longs. And then soon after the Dow was going up and taking multiple trades over a period of a week, I was shorting gold as well, because that was correlating perfectly. And so yeah, that's where we're at. So you see here on this other screen, this is what I'm looking at. I've got the correlations going on. I'm looking at all time frames on the Dow Jones versus gold, and I'm looking at what the fundamental news is telling us. And so I was ready for gold to have another drop and break 1850 support. 1836 was the first target, which it hit, and it rested on there on Monday. The reason it found support there was a fib extension, so it broke and extended nicely, perfectly, and then it just sat and rested, which I think if we open up this 4-hour chart, let's have a look, you'll probably see it here. So use technicals and fundamentals hand in hand, and some of the most powerful technical analysis that you can use in terms of helping you understand the price action is not just price action on its own, which is great. Nice to have a few other little bits and pieces, bells and whistles. So fibs for me are great. So we had this move down to 52 on the Thursday, and then we slowly started to climb up, and we culminated in a nice spike up. It was a nice little pump, and this is a 4-hour candle, so we pumped up on Friday, and then we did this. We started to just peter out, and I said, well, okay, now's the time. It's now or never. We've been down, we've rejected here. we're going to put a small position on, and we're going to start building this position, and we're going to short it because it's gone up here. It's given us another opportunity. That's what I saw. I viewed this as another opportunity to short this market. A pullback in a bearish trend. A pullback in a bearish trend. That's it. There's nothing else to it. Fundamentally, the stars were aligned. We keep hearing of other companies coming out saying vaccine's good. We have something that will cure your cold, stop you sneezing. And yeah, happy days. So it was just a case of sitting on your hands, waiting patiently. I took the positions on the Friday because I was thinking that we may get more positive news come out over the weekend, and then come in on Sunday night stroke Monday morning to find that these markets would have gapped down at the open, and then I'd be up like a squillion pounds and be able to just close it and bank it and go to bed on Sunday evening feeling quite happy with myself for having taken the positions and held them over the weekend. It didn't work that way. It didn't actually break and go down until about 2:45 London time. 2:30 is when the New York Stock Exchange opens, London time, which is 9:30 New York time. 5-hour difference. So they opened, and about 15 minutes later we saw this. So I was here ready, and I was sort of saying, well, what took you guys so long? I've been waiting here ages. I've had 10 million cups of tea, 20 pieces of toast. I'm still waiting. It was like that. So it was cool. And during this period, it was interesting because I spoke with a few traders, a few of you guys, and you should have seen what they were doing. They were jumping in, they were jumping out, they were scalping, they were taking longs. It was just like so impatient. It's like taking a 5-year-old to have his hair cut and telling him to sit still. It's funny, but you learn from your mistakes. You need to just kind of sit on your hands and chill. Trade your plan. So that's why it's important to have a plan in the first instance. Have that plan ready and think, okay, look, if it does this, then we're going to be on it, all over it. We're going to just capitalise on that money, on that move, make a ton of money, and then we're going to take the next few months off and have a long Christmas and New Year, which I'd like to do every year. Generally I like to do that, but this year it's not happening because we're in lockdown, and then even when we come out of lockdown, there's only a few places you can travel to without sort of coming into having to quarantine, and you know what I mean. It's just hassle, and you've got family in tow. It's different. Start dragging your family places because you want to go on holiday for some sunshine. So you just have to just have to suck it up, be patient, and bide our time. And so what I'm doing instead? I'm spending my time doing this with you guys to share what I think about things and how we analyse things, and anyone have any questions, I can help answer them. So with all of this, I said I'd finish trading because I'd had a very good, strong month, and I said last week I finished trading last week, but I said I would still be interested in shorting gold should it set up. So this was my only play, and it's played out, and I'm still holding some shorts now, and that's where we're at the moment. So you can see first target was down here, 36, 1835.9, so 36, 161 extension, come down into this sort of safety net, got caught up in this little like a little fishing net. I caught the move, perfect, sat there. And then the next day we come in and it continued to go to 18. So 1836 was T1, 1800's T2, T3 is here, and T3 is this. T3 on gold is 1725 I said, but specifically 1726, and I'm taking that last swing low. You could take these, take the very last low as well. So you could put fib clusters. We call these fib clusters. you overlay and you see which fibs overlap another fib, which creates a good level of support. It just bolsters that level of support. It's like building a brick wall and then building another brick wall behind it, and it's kind of like that thinking. So you could even do it here if you want to get really into your fibs. Yeah, definitely. And this is high time frame, so this is monthly on the gold. So because trading is subjective, there's no right or wrong way. So having those fibs is fine. But add a couple more. Let's zoom out a little bit. This is a monthly. Let's zoom out because we want to look at where can it get to? Where is it likely to react? It's really interesting when you start putting your supply and demand zones on your charts. When you start putting your fibs on there. When you start looking at previous structure, and that arguably is the low down at just over $1,000. And this is going back to 2015, December. Funny enough, December 2015. So bottomed out at December 2015, about 4 years or so later. Yeah, so we made a higher low. Yeah, so there you go. And it gets a little bit, it makes your chart a little bit messy, and it can get a bit busy. A lot of need 3D glasses to look at this. So, it can do that. You can overanalyze something to oblivion, overanalyze it until you've run out of things to analyze. And, you can, that's the subjective nature of trading. There's not necessarily a right or wrong way, but you get the gist. And don't panic if you're not sure. Just ask. Just go on YouTube, have a look. People have got their own way of doing it. And the greatest thing about trading is that you find a way, a style, a trade plan that works for you. Maybe go on Baby Pips and take their personality test. Find out what type of trader you are. Are you a scalper? Are you a day trader? Intraday trading? Are you a swing trader? Think about your personal conditions, personal way of living. Are you a very busy person? Do you work a full-time job? So you'd prefer to just put some swing trades on? Stuff like that. So, think about all these little things. Always just sit, take a step back and think the bigger picture. A lot of it is common sense. The gold trade was common sense. It was about understanding the workings of how the banks are going to do things, how they're going to move their money around. Are they going to keep holding such a big, hefty amount in gold? Well, it didn't look like it when they took this sell-off, when they announced the vaccine on that Monday. That for us gave us a bearish inclination to short it. So here, I don't need to put lots of fib clusters on here. All we do here is we get one fib and we take the high, which is 1965, 66 or so, and then we take it all the way down to the low, which was 1850 and a half. Well, that was a move. Look at that for a move. That's 1500 pip move. So, alright, appreciate that you are going to see some recovery, some buying, some profit taking, because 1850 is the previous low. Appreciate that that's going to go up and retrace. So it was impressive that it managed to get up to 1894, which I did say long to 1894. We were long to 1894. We took some longs as well from 1865. So 1894. Why? Because that's 38.2, the first major bit of resistance on what proved to be a massive move down. So you needed a bit of a retrace. Starting to get some signals here to short it. Fundamentally, Tesla stocks don't make sense. This is where you just need to kind of look into things, and understand sentiment. Markets are sentiment driven. Humans are the people that are making things happen. So you're basically talking to another trader and saying, why are you buying that? That doesn't make sense. And then he may give you some fundamental reasons as to why he is. That's what the banks are doing, talking to each other. Why are you guys buying that? Well, because if we get in now, in 6 months' time we can cash out. Somebody within the banks maybe knew that Tesla was going to be pushing. I guarantee that they probably knew that Tesla was going to be pushing to become part of the S&P 500 US stock market. So people were buying on that speculation. Insider trading, whatever. It's what you know, not who you know. Or no, it's who you know, not what you know. And then they'll tell you what's going on. You find out from the right people, yeah. Tesla makes perfect sense. You're not just not seeing the bigger picture. You're missing the trick there. What did Tesla just announce this week? Oh, they're joining the S&P 500. That gives them proper legitimacy. They're no longer a bastard stock market stock to hold or share or just to take punts on or gamble. They're a real force of nature now. There's real take them seriously, sit up and pay attention, look at what's going on in the world. Biden's very much about green, very much about reversing a lot of the bills that Trump passed. That's one of the things he's going to do, isn't it, in his first 100 days? He wants to do away with some of the bills, some of the decisions that Trump made that's going to affect, that's not environmentally sound. So he's very much about, let's do stuff that's more environmentally focused. So again, betting on Trump, betting on Biden, just things like that, So fundamentally, a couple of things that make sense. You don't need a lot more than that. What more do you need? I think sometimes people, again, try not to overanalyze or overthink, but just common sense. Just do some due diligence, some research, and think, why is that happening? There must be something, and sometimes it may not become apparent straight away, but you'll get to see. People are asking why has Bitcoin gone up? I'm not going to answer that. I'll just leave it to you guys. You want to be a trader, then there's a bit more to it than just scalping or pressing buttons and getting all nervous. You're nervous because you're not in the know, because you haven't done the research, because you can't be bothered. That's what it comes down to. Or you just haven't been shown how to research or how to build the foundations and look at, setting yourself up for longevity. Because I said it the other day as well, we live in a society where everything is now, everything is, the new millennials, they've never had it so good. They just go on their phone and they can just find out and do pretty much whatever. And instant gratification, which you know what happens with instant gratification. It makes you lazy and it makes you complacent. And people send me messages and ask me questions, which I just think, you could just Google that and find out. And you've got a phone, no doubt, or access to the internet, and you could do that. But they've become so lazy, so complacent, they can't even be bothered to do that. They'd rather type to you or put it out there in a forum, why is that? Whereas they could type the same question into Google and get the answer straight away. And that's how how crazy it is sometimes. It does my head in. I'm just thinking, God, and you point it out to them and they're like, oh yeah, it's just, yeah, I can't see you being a successful trader somehow. It might not even be their fault. It's just the way that society is. That sets them up. But anyway, that's on a personal level. That's something else entirely. But it's just. But you get my point. It's just little things. These are the little things. If you make small changes now, they will serve you well. And if you want to do this as a business and you want to make money as a trader, these are the things that you're going to be having to do. And grafting means not necessarily getting up at 5:30 like I do, at 5:20 this morning. You don't have to do that, but it might help to get ahead of the day, so that by sort of 8-9 o'clock, when you're a trader, for me, if I'm done by 8 or 9 in the morning, happy days. I'm so happy. I'm like, I'm right. What's for breakfast? I'm done for the day. And then I have to worry about first world problems like, should I have a shave? Should I not shave? It's just hard life sometimes. So, but yeah, so set things up, have a little routine. I think Rob's got the right idea. He's quite extreme. He's gone one better. He gets up at 4:30, and he does his bit of meditating. Meditation's good. Breathing exercises. There's apps for that. Put your phone to good use. Don't just spend time on TikTok or Facebook or Instagram or just scroll like. I've got to do my scroll and like every 20 minutes. Otherwise, I'm going to get twitchy, get withdrawal symptoms. And that's a thing now. Maybe download an app. Yeah, exactly. And listen to me banging on about stuff. Yeah. Does anyone want to take the mic, or should we look at anything else? Or should we cover? Have I covered everything on gold? You get the gist on gold.
In the group chat, somebody asked for. Yeah.
Sorry, what was that?
Somebody asked for GJ in the group chat.
Oh, GJ. Oh, Reese. Yeah, sorry, Reese. Let's have a look. What are your thoughts on that? I did some analysis on it the last few days, Monday as well. It's played out. What are you thinking? Have you got some ideas? Firstly, what do you reckon, bullish or bearish, guys?
Bullish.
This is a 4-hour chart. So, bullish. Anyone think anything else? I know what people are looking at here, looking at an opportunity to short this, which it's valid now because yesterday it had to play out. And you look at yesterday's daily candle, it's quite small compared to the previous day. Monday was the day where we were going long, and I said T1 was 139.57, so 139.50 area. I said you could even put it above that, go to 139.60, round it up. You remember me saying that. I recorded it as well. I've got proof. I don't just talk crap. I got proof. No. Yeah, no, I said this on Monday, like with this is a really nice bit of price action, isn't it? It's pulled back off this impulsive move, and we found some support. We consolidated for a long time at that supply zone. It just held really well, and then we had this little stab down, which was a little bit of a liquidity grab. Some people made some money shorting that. Others would have tried to short this and got stuck down here, selling the breakout. And if they didn't manage their risk or stop loss properly, it would have just been like bang. But yeah, as it started to pump up, we're saying, okay, yeah, we should be going long. T1 is 139.50 to 60. I posted that in the Telegram, in our Telegram group chat, posted it, which anyone can join. It's free. In the Discord, it's all out there. So that was good. T1, T2 is this other 76.4. Which is the bigger picture, 140.40. It likes the 30 number. It likes the 30 number pound yen, and it's gone up to 140.31 on the last move before it fell over. So we shorted this on this move a couple of weeks ago. We made some money here from 138.50, got in quite late, and looking for 138.10 T1, and then was looking for 137, 136.80 because it likes the 80 number as well, which was like a pullback down to this structure. I think it was might have even been a 76.4 if I remember right. Let's see. It was this impulsive move up would have been using my 764 strategy. down to here, 136.81. There you go. See, I remember. I just remember because I know what I'm doing. Believe it or not. Um, it's good to remember. People used to say to me, "How do you remember what the levels were? Where you were doing that?" That's because that was the last trade I did, or that was one of my trades, and I put a bit of thought into what I was doing. It wasn't just a scalp that you don't remember. Ask me what I had for dinner. That I probably won't remember. But stuff like this, you just remember, don't you? You can recall it and understand why and what you did and the reasons, and you journalise it as well. That's part of the reason why I remember, I retain, because I journalise, because my brain isn't that great. Haven't got photographic memory. But 76.4 is a good one. 764 strategy. So yeah, maybe we've already had the little pullback from 60, 70, went down to 139. Let's have a little zoom in and see. This has to break. If it finds support here, a resistance here, this 76.4 holds, and we make this lower high, then we look at shorting it, proper bigger picture, bearish. But otherwise, we're still bullish, and you could have taken a cheeky 764 strategy short from 139.57. Your stop could have been at 139.80 area because it likes the 80 number. Let's drill down a little bit more and put it on like an hour time frame. Just see the price action. Pound yen's really nice to trade. You see all the influencers on the internet. They like trading pound yen, don't they? They all do. It's funny how they all do the same thing. They all copy each other. They all charge $150 to pay for their Lamborghini. They charge for their course pretty much the same. Always plug in. They've got merchandise. Same format. They do well. Got to appreciate, if you've got 200 subscribers, you're charging $150 and you're bagging 30k a month from just that. That 30k serves you well. You don't need to spend it. You can put that into your trading account, and then you can trade with it, and then you can build up and compound, and that will help you grow exponentially. So I can see why they do it. It's not like, ask them, where did they start? You start with 2k in their account. They just, did they do a Sean Lee and just hammer it for 30 days? And forsake all the risk and draw down and build it up to turn 2k into 200k, or did they start with like 2k, build it up slowly, trading a little bit here and there, but thought, actually, if I put myself out there as a marketer and an influencer and a trader, people start following me, then I can charge money, and that money can go into the kitty as well, into my account, and I can get to my 50k trading pot a lot quicker. Year 1, and then year 2 is like 100k, 200k. By year 4, year 5, they've got £1 million. Power of compounding and smart business decisions. So hats off to them. But yeah, there you go. So 764, we went up. So for this, to short this move here this morning, which was 8 o'clock London Open, 8 a.m. London time, which would have been 3 a.m. New York time. Put your stops just above, likes the 80 number, likes the 30 number. Short it from 139.80, well, anywhere 60, around a 76.4. And then put your stop just above, which would have been a nice stop actually, 20 or so pips, quite good. People like that, don't they? They like their 20 pip generic stop loss. Yeah, so that's actually played out. That's actually done quite well. 764 strategy has worked. That would have given you down to 139 about a good 50 to 60 pip move, so that's decent. And yeah, so that was good, right? So what is it you were thinking? So QW can't hear me, can only see half my screen. Is everyone okay? Can everyone see what I'm doing with pound yen? Okay, that's cool.
Fine for me as well.
That's all right then. That's good. Okay. Yeah. Just type it. Let me know if you still have audio and visual impairment. No issues. There you go. Okay. Yeah. No, it's annoying though, isn't it? If you can't see. QW. Can you see? Can you hear me? QW, hello. Yes, no. Your mic is on, so just say something. And no, okay, maybe not then. Yeah, so there you go. So that's quite nice. I think the 764 strategy has proven to be quite popular out of my 3 strategies that I've shared. I put them all on my YouTube channel, and I saw that one was being viewed, and the length of viewing was a little bit more, because I wanted to sort of get a feel and feedback in terms of how, what people think and how useful they are, and will they help you make money, and that's what it's about, isn't it? So, and I found that one people could relate, because people use fibs quite a bit, and yeah, it's good that people do. I've seen some weird numbers for fib levels though: 71, 72, 77, 78, 79. So why don't you just do 70, 71, 72, 73, 74? So why don't you just do them all? I mean, you might as well. You've put enough on there. And then it hits one and say, yes, it hit that one. There you go. Yeah, I don't know. Yeah, 76.4 plus 23.6 equals 100%. 61.8 plus 38.2 equals 100%. Where did I get the 23.6 from? Well, that generally is found on your fib tool, on your fib charts, but I don't have it on there because I don't want it on there. I focus on the 38 and the 50 and the 618, and then obviously my 76.4. But it's about carving up the range. So this is our range on the pound yen, and there's that 23.6. I don't tick it, but if I did, it would show us down at that supply zone. Sorry, demand zone. It's acting as demand. A lot of demand there. Move this out of the way so you can see what I'm saying. There, it's this one. It's greyed out, but it's a demand zone. So you can use that. People use the 23.6. I see it on charts and I don't have any problems with that. I think, okay, yeah, it's cool, it's fine. But what I do have issue is with up here. Stop messing about up here with the numbers. Just put one on there, pick one. Some people have a 78.6, I think it is, 786. And TradingView, I think, uses 78.6, sometimes generic, depending which tool you're using or where you've got it from. And then, you may not even realise, somebody didn't realise the other day that they had the 78. I said, you do know, they asked me about what fibs I use, which ones I use. I said, you've got 78. I said, oh, I didn't see it on there, I didn't realise. Small thing, it's not the be all and end all, but yeah. So yeah, there we go. That's it. So I find that it's difficult to determine where to draw the fibs from. It won't always match to where others draw them. That's trading. It's subjective, and like support lines. So it's probably a zone rather than an exact level. Okay, so one trader, when he's using it on the smaller time frames, because I'm guessing that you're probably putting it on a 5-minute or 15-minute. Do you use higher time frames? Do you have that problem with it? Do you have that problem on the higher time frame as well, or do you find that it's generally relevant? 1 hour. Okay, 1 hour. Let's have a look at the 1 hour. So what are we on now? We're on the 1 hour. So so it goes back to your top-down analysis. So if you're focusing on the 1 hour, have a look at the higher time frames. I have a 4-hour daily, weekly, monthly. Some people have like a 12-hour and every hour in between. I mean, 4-hour daily, weekly, monthly is fine. So maybe go to the daily. So get the bigger picture first. So maybe start with the daily, see what's going on. Let's have a look at this. So this is what's happening here. This is the most current bit of price action. I'm interested in this, what's happening here. Let's have a look at that. Why am I interested in this as opposed to what was over there? Well, because this is a daily, and these are quite a few days. And if you look at the range from say 142.70 to 133, that's nearly 1,000 pips. That's quite nice. Let's play in the 1,000 pip range, everyone. That's nice. Play to the lines. Let's create this as our football pitch, as our playground. Let's focus on that, and then by doing that and drilling down, and it saves on over analysing. Obviously, if you want to keep an eye on what's going on because you're a swing trader, then of course you want to use the monthly. And you want to look at, you know, what's going on monthly. That's not really telling me a great deal. You know, it's come from massive highs several years ago. Weekly is a bit more appealing. This is a weekly trend line I've got on here. That's showing me the last sort of swing highs. But otherwise, you know, and here I haven't done it yet, but this is a good time to do it. Now we've got it here. You know what I'm going to do, right? Trend line, bottom trend line. I haven't got one on there. So stick that on there, because that's March when we had the pandemic and we had massive dollar and yen strength. And then we've been making higher lows. You can see we've been making higher lows. You know, each time going up higher than this low. This low is higher than this low, so it's a higher low, and then we peaked up here. We went all the way up. We made a new high. We didn't take out these highs, and then we dropped back into the mix. So I thought, okay, that's made itself known. Very pronounced, nice high, taking out the previous. We'll use that as our high. That's our starting point. So trying to find something on this chart. Cool, this is a weekly. Where's my low? Well, there. These lows haven't taken out that low. So this one's still valid. This one's still in the game. Why am I not using these ones? You can put them on the higher. Maybe use your monthly charts or weekly charts and plot them like from there to there. And I do, don't get me wrong, I do. And I do this. But it depends what you want. You know, what is it you want to focus on? What are you looking at? Do you want to know why this stopped here? There you go, that'll tell you. Because it hit the 76.4. We had a 764 strategy in play on a weekly time frame. And what happened? It hit that 76.4 and it fell over. It hit it and sort of bounced off it like dodgems, like a bounce, like the what do you call those cars at the fun fair? The dodgems, yeah, bumper cars. It hit it and bounced off it, didn't it? That week. Following week, we fell over. We didn't go and retest it. Previous structure as well, coming into a good bit of supply and demand, good supply zone. We can do this. So let's dress this up a little bit so you can, you know, it makes you feel better. It's like having a little comfort blanket. You know, you got all these little bits and pieces. Oh look, I can see why that's doing that now. And you know those traders that tell you that they trade with naked charts. They do, but they still look at this stuff. They just don't put it on their chart because they don't need to. But they still look at it. They still are, maybe not look at it is the right word, but they know. They just have an idea. Like I said to you about the trade that I took while I was looking to short this the other day down to 136.80. You just remember. You just kind of know. Some traders have got a better memory, and so they can pretty much just look at the chart and kind of know, yeah, that's tested that area. And I think experience pays as well. They've been trading for such a long time that they know which levels are relevant because they were testing those levels a few months ago. And so you know what I mean. You just, this is why you're told sometimes just focus on one or two pairs and get to know it. This is what they mean. Get to know it. Get familiar with what it did and what it does and what it's done, and it will help you, won't it? It will help you. So it's solved, he said. So yeah, there you go. So that you just find it. See, if I took all of this away, you're just looking at some charts and you think, oh God, it's quite a daunting prospect. Don't know where to start. And I can appreciate that. But once you do put some stuff on your charts, on the high time frame, like a weekly, you don't need to then change it. You won't need to change it, you know, after 5 minutes. Whereas if you're using it on a 5 minute time frame, you'll have to change what you did 5 minutes ago, or in about 40 minutes time or so, you might have to change it again. Whereas these high time frames, just put it on there, leave it, and then when it's relevant and comes into play next week or tomorrow, then you start looking at it and you can drill back up to the weekly, do your top down analysis and say, oh yeah, that was there from 2 months ago. Okay, that's a powerful area, right? Okay, so you think, should I buy up here? I don't know about that. Maybe we should not buy. Okay, and it'll help you make these decisions. You are becoming better informed and a bit more of a rounded trader because you're able to look at stuff and you're forward testing as well as back testing. What do I mean by that? Well, you're where you're trying things out and you're saying, okay, I'm going to sit my hands, I'm just going to see how this plays out. I've got my support and resistance. I think that support and resistance is correct where I've put it. If you want to ask me, send me a chart, you can send one over to me and say, what do you reckon? And I'll have a look. Otherwise, you just sit there and you look for yourself and think, okay, yeah, I think that's right. And forward test it. Wait for the price to go up there, test it, see how it reacts at the area. Think, yeah, you know what, that is right. That is resistance. It is relevant. Actually, I'm going to take a trade here now. I'm going to formulate a trade plan. I'm going to take a short here. I'm going to put a risk on this bit just above, and etc. etc. And so you take it from one stage to the next, and that's what you do. So, hi, why are you including Mark? I'm not Mark. Alex. Hi, Mark. Why are you including the wicks in your fibs? And not only the bodies. Oh yeah, I was going to touch on that. One trader, he only looks at the bodies on the smaller time frames, like the 5 minute and the 15 minute. But then on the high time frames like this, he will include the entire move. And I think that includes in what I just said, the entire move. I want to acknowledge the entire move. The wick is the entire move. Just because it's a candle and it's done a wick, you know, change your candlestick to what do people do sometimes, a line, and then there you go. Where's your high and low now? Where's your wicks that you don't include? So I think that answers the question. I take the highest point and the lowest point. The highest point and the lowest point. That's all right. And it's as simple as that. Trading doesn't need to be complicated. One of the guys, he does, Tom, actually, you probably know him, M3, Tom, he does smaller time frame analysis. He uses the body of the candle on his candlesticks. Because, it's just, because with the smaller time frame, you're probably looking at a few pips difference often. Unless we've had some massive mammoth move like we've been having recently on a Monday. I've been coining it Massive Moves Monday. It's just stuff's been happening on a large scale on a Monday over the last few months. It's been quite a good day to trade, Whereas most of the time, a lot of traders I know don't even trade on a Monday. They'll come in on a Tuesday. And even this weekend, I was looking at a trader saying, "Oh, I'm not trading on Monday. Monday's manipulation," he said. "Monday's just manipulation." And then gold fell over, and I bagged a shit ton of money, and I thought, yeah, we like this manipulation. Bring it on. And he's like, damn, I wasn't ready. Because I was thinking Monday's not a good day to trade. I was like, yeah, but we've had the last 3-4 weeks. It's been great. Mondays have been brilliant. What's wrong with you? He's like, yeah. But, it's his routine. I was just joking with him. He has a routine. If he just wants to trade Tuesday, Wednesday, Thursday, it's brilliant. So what? It's a never-ending buffet, this game. So he missed Monday, Tuesday. He was still able to make money on the Tuesday with gold. And gold for him confirmed that it was bearish. And so he jumped on it on Tuesday and made a ton of money shorting it on Tuesday. So he missed the initial setup on Friday / Monday. But he still got in on Tuesday and made his money. So trading, subjective, find what works for you. One thing I would say is take your time. You're doing the FTMO, take your time. They give you 20 days, take 20 days. You get 2 months in the verification, take 2 months. Don't push to try and force it to. If you do it before, great, happy for you. But don't force it to try and get there in 10 days. Why? What's wrong with you? It's not how you trade. And then they're like, but when I get my real account, then I'll do it completely different. I'm like, well, why don't you do it right now and do it right then and do it right in 3 months' time, 6 months' time? Just keep doing it right. The right way, one way, get into a routine. Routine's really important in this game. And that's it, make little tweaks and adjustments here and there. You know what I mean? Oh, yeah, okay. It makes sense, right? Makes sense. Common sense. A lot of this is common sense. We get mesmerised by what's going on with the charts. So I think for pound yen, I'm still looking at it being bullish overall. We've had a bit of a reaction. It would have given you some pips at the London Open. It was profit taking when London opened on pound pairs. We had the retracement and the drop. And now if you look at all the pound pairs, they are slowly clawing their way back up, and maybe if you do something like a 1 hour time frame, you're seeing this move back up. And I still feel that we have upside to be had, and yeah, but I don't expect too much to happen until they sort out Brexit, and they are close to working a deal, which is why the pound has remained strong and bullish. So that's taken us back to fundamentals.
What triggered on a short stop in gold?
Are you shorting gold, are you? Let's have a look at gold. Let me remove all of this. I don't need all this.
It looks like it found a resistance at like around 1814.
Yeah, for the moment, but even you said in the chat that you were looking for 1800, 17, a break of 1800, right? So just see what happens.
For scalps, like
Yeah.
I look at this level, but of course for like a swing, I
Yeah.
want the 1800 to be broken.
Right. Yeah. And if I put my fib clusters on here, oh, where's it gone? I lost it.
Yeah, it's
There you go.
really rejecting the
15. Sure.
21 late.
No,
Like
it's understandable. We've had a big move. You know, you're trying to get into a move that's 2 or 3 days in now, and you know, so it's about being late to the party, fashionably late, and just being late, rude late, to a point where it's, yeah, you're not going to get anything because the buffet's been eaten and there's a few scraps left. There's the bits left over that nobody likes to eat, whatever they are. There's always bits that you know people don't like to eat. All the good stuff gets taken straight away. And that's what you're trying to do with gold, you know. Trying to short it at the 1800 level. So I think you asked the question as well, didn't you? You be about the 1800. Do you want to short it further? Would you look at shorting it if it breaks? I'm like, yeah, I think if it continues, then sure. But I'm still holding a short. I'm still holding a short position from 1834 of the break of the first move. So anyway, look, my support's here at 1726. That's where I'm really interested in. I am looking for further downside. It may take a while, and it may move like this, consolidate. It may move like this, pullbacks. Now you have to kind of appreciate that it may not move in a straight line like it did before. You know, if you catch one of these moves and it moves in a straight line, and people are praising you as a god, thinking, wow, how did you know that? Just understand that markets don't always do that, and they trend 20% of the time, maybe, give or take. So
it looks like on the 15-minute chart, gold just hit that area for the third time on the 0% level. So basically,
1, 2, 3, yeah, it's testing, isn't it? So if it breaks this level, you know it's going to go higher. But if it fails here, so I think you need to just wait, sit in your hands, and wait for this to do something at this level, because it's a
exactly.
Go with the trend and assume that it's going to just drop back. That's one thing, but I mean, you could have said go with the trend up here, go with the trend up here, go with the trend, maybe up here on this pullback. But you can't keep using that one as an excuse or as a confluence. Go with the trend, because we've gone with the trend, and it's moved and it's hit a target. So all of this now is very much about, if it holds here, then we can get down to 1800, and it'll test 1800 before the close of today. And the time is 1 o'clock. We're just coming up to 1 o'clock London time. So
we're about to go into the New York session.
Yeah, that New York opens at 2:30. So in 1.5 hours, New York opens. So yeah, I mean, I had one position on down to here, and it didn't. It missed my target by, I don't know, 3 pips maybe. And I was out.
Yeah.
I was out and about yesterday. I was just doing stuff and I was just chilling. And I looked on my phone every now and then. And I was taking some scalps every time it went up. I shorted it. Went up, shorted it. You know, did a bit of that. But I tried not to sit and do too much because I knew I had a short on and I just wanted to keep shorting until it hit 1800. I thought I'll short and repeat until we hit 1800. Then I'm done. It still didn't quite hit it there. And then we went up last night and I shorted this morning a little bit. And I was asleep still here at about 4 o'clock this morning when it went back down to 1801 area. I would have closed everything out there, 1801. I would have been like, you know what, I'm done. But I missed it and it was already double bottoming and then trying to reverse and go up. And yeah, so now we just sit and wait. And I did a little double top short here, which was good. I caught that from 11. Well, I had one at let's have a look. I'll tell you where I've gotten in and I'll tell you where I'm looking to get in next. So right now we are on gold. Gold, we have a short on at 1834.73. The stop loss is down 1823, so that's locking in 210 pips. The target on that TP take profit is 1800. So that one's just on the in play at the moment, and that's saying 15,800 in profit. It was at 18, 19 and 20,000. That's 15. It's just whatever. That's doing whatever. And then we have several others which are just scalps, and one that I've got on at the moment is 12.93. I didn't realise I had 12.93. When did I put that one on? I'm talking to you guys. But I have closed some positions. I had one on this morning at 07 down to 05. I had one which I put on when you guys were talking about putting it on, 11. That's the one I closed at 8 for about 30 odd pips. And then I had one at 14, took it to 11. Close that for about 30 odd pips. So I've done 30, 60, 80 pips shorts at, what is that, 250, 250? 25 lots. 25 lots, yeah, so it's about 11,000. 3 trades, and I still have a couple of little ones running, and I've still got the main one running, and yeah, that's it really. I want to see what happens with the US trades, US session. Will they push this up to 30? Or will
Because I see on the hourly, I see like a fib level at 18, 15, 61, which is where I placed my SL
Where
slightly above that.
where do you see
But last
your
time,
fib?
so on the hourly chart,
Yeah, let's
I
go to an
placed
hour.
it, I think, a couple hours before. So I think it was basically the span of a day. I placed it at the 1835 candle.
Yeah,
So
there,
where did
yeah.
we place last time?
Yeah, that last
So
little
from
swing
there,
high. Yeah,
I would say like the 61.80% level
yeah.
might try to be tested today, and then like based on how the U.S. reacts to that, or the New York Open, I think then more can be like ascertained from it, because right now it's just consolidating.
Yeah, so with these 1 hour charts or 15-minute charts, you can look at the range. So people were asking, this is a good one actually, talking about where to mark, and do we include the wicks, and where to mark these fib levels, identify the support and resistance. So this is a good one, support and resistance. So pretty much taking that last swing high. The reason we do that is because it took out the previous low. You can see where it's gone, and then it hasn't been challenged. It went to 1833, and then it hasn't been challenged. The price has never been back there to visit. So it's left that wick to the upside. It's left that attempt to go long up there, and that's your marker, right? So there's your first mark. So there's your starting point. So we put our 100% level there. because we're monitoring this retrace, because we've sort of bottomed out at 1800 and we're just watching how price is now retracing. This is what we call the 3 option rule. We'll look at the Dixie in a second, but this is what we call the 3 option rule. So the 3 option rule is that price will do this. It's in a trend, or it's making a trending move, so it's bearish on this occasion. And now we want to look at the retrace. We want to measure and monitor the price action, the retracement, as it comes into, comes back to test the 38.2, the 50%, the 61.8, the 76.4. And this is where Rob's strategy comes into play and seems to be pretty decent, because he's looking at these retracement levels and he will scale in and take a small position of 0.5% or 0.25%, a little position. He gives it some thought. And he'll say, okay, if it gets to 50, I'll take it. Or like here at the moment, we're just holding. So he might take one small position here at like, I don't know, 13 or somewhere like that. And then if price does retrace up here a little bit more, he may look at taking one at the 50 or the 618. But by the time it gets to that 76.4, if it is to get up to about 25, let's just do this. Let's move this so you can see, and then zoom in. Is it clear? Is the chart clear? Can you see my charts?
Yeah,
Can you
it is
see the numbers? Yeah. Yeah. So what I'd say is we're just in this retracement phase at the moment. We're respecting and struggling to break the 38.2 at the moment, which is kind of nice, really. You want to see it. Just the first option being it's going to hit one of these fibs within this range. So it hits a fib, and then it bounces off and it sells off and it goes back down and tests the low, and then maybe goes on to break the low, etc. That would be nice. That's the ideal play. Continuation, short. The other option, the second option of that 3 option rule, is that it will retrace 100% up here. So it will go back and test that previous high, that 1833 area. So get back up to the 1830s. What else do we have up there? Well, we have the bigger picture. We have a 38.2 up there, bigger picture. So 1830. Again, this is why we do the top-down analysis, higher time frame. We want to look at that. We want to look at let's have a look on the 4 hour. This range, the original move, same thing as what we've just done there, identifying the last little pullback. This is the same thing, the last pullback before we broke support, before we fell over. Last pullback, and that last pullback took price up to 1879.97, so just shy of 1880. We went all the way up just shy of 1880, and that's when it fell over. So we had that little pump, and then it ran out of steam, so I shorted it. And yeah, there you go. And so we're just watching now, and we're going to wait for this to curl over and go down. So done that, made our money there, and then we're going to wait for continuation. Yeah, we've done that, made money there. Now, right at this second, we're just watching a consolidation, and we're going to see, is this just going to pump up? Well, it has a high chance now of having done all the downward movement and just retracing, putting in a proper retracement. So with Rob's strategy, if it gets to the 76.4, he will jump in on that and he will put his stop just above, and he will take his risk, the bulk of his risk up here, because he will have basically answered the question for himself and said, okay, where's a good time to get in? Where's a good place on a retracement? Okay, but what sort of a retracement is acceptable for you? What sort of retracement would you like to see? And he's basically saying, well, I'd like to see the best kind of retracement, the biggest retracement, the highest retracement possible, but that's still going to be giving us lower highs. So coming up here and not taking out this high and still being a lower high, and so still confirming that we're in a bearish trend and just basically getting a pullback to sell it back down again. And so that's how
Does he add to his position on the way up?
Yeah, because using the fibs, he said, I think he gets in at like 50 or the 61.8. He put a bit there, because I think that helps with these, because you never know for sure. That 3 option rule is it retraces to one of these levels. But the problem is we've got 3 options of this first option. The first option, it's going to retrace and hit a 38 or a 50 or 618 or 76. That gives us actually four possible places where it can retrace to. So you don't know, do you? It's not an exact science with trading. We don't know what sort of a pullback we're going to get. You'll know when you see it. Because, for example, when the US come in, they might do this. They might just pump this up and go spike, bang, take one of these big moves, and then we'll get in. We'll sell that impulsive move as it puts in the correction back down again. So that's why they say if traders learn to sit on their hands 50% more on 50% of the time, they'd be more profitable. Because, it's about waiting. Can you wait? But he's of the thinking, well, he's not sure and he doesn't want to miss the move. The FOMO comes into play, fear of missing out. So he'll scale in. He'll put something on here, something here, something here. Worst case, he's still risking like 1% or 1.5%. I think he said 2.5% he had maximum drawdown on this trade if it doesn't work.
So potentially by the time we get to 74, 72.4,
Yeah.
you could have 2% on the table.
Well, no, I think it's less than that. I think he might have 1.5 because he puts little positions on. But if he gets to the 76, then he'll put like a whopping great position on. The bulk of his money will go there. Because his risk up there is small because his stop loss is just going to be above a little bit. It's not going to be...
All of these stops will be above there from you.
Yeah, above the 76.4. And but that's him taking a risk and going with the flow and thinks, okay, what's the bias on this? Now, he's not going to get it right every time because, the bias may change. So if you're trying to do this now, he wouldn't do this on this trade. I know that. He wouldn't do that here. He just wouldn't bother because he would say, his argument is quite simple. Gold's made a move. It's made the move. It's made a big move, a huge 800 pip move. So I don't think he'd be too bothered about taking a short unless it does get to the 76.4. So again, ask questions of yourself. Would you do this? Do you think it's a good idea? Well, this has made an 800 pip move. Why am I trying to short down here for scraps? So there's 2 ways to play this. Wait for this to pull back to here. Or, no, 3 ways to play this actually. It's 3 ways. I wouldn't do the third one. I'd do the first 2. And they are as follows. So we can use a 1 hour, a 30 minute or 15 minute. Do what you guys are trying to do now. Intraday traders, day traders looking for this resistance. We're in a downtrend, the trend is your friend. You're trying to short it around 18.14, 18.13, 18.12. I'm doing that as well. My stop loss, therefore, is easy. I'm going to put it here. Put it about 15. If it suddenly spikes up, I'll just step out the way and leave it alone and won't bother doing anything else with this. So that's my first option. Second option is to be really cautious and wait and just hope it goes up to here. There's a 76.4, 18.25. Or basically retraces 18.25 to 30 area. Then look for shorts up here because then you will have sat patiently, allowed price to go all the way up there to put in a proper, healthy retracement, allowing you to get the best possible entry to short it back down with the trend because it's bearish. There's not an option to go long. Forget the counter trend trade on such a hefty fundamental move with gold. We've explained the reasons why we're shorting gold. Vaccine, money being moved out now from a safe haven. Gold is often used as a hedge. Don't need to do that when you're, when things are not that bad. You know what I mean? So the counter trend trade, you can do that if you want, but I don't need to. I'm not that desperate. In fact, I'm going to take my profit on this next position I've just done. There we go. Just bagged another 2,000, 2.5 grand. Just there you go. Just bagged that on that little pullback. How many positions do I have? Still got a couple open. I've got and they're the scalp positions, but I've also got that big position from up here. And the third option, I didn't get to the third option. Third option is to be super safe, or you might think you're being super safe, but you're not. You're being super cautious. And instead of shorting here, which is the option that I would go for, which is the option I have gone for, This is the one that I would do. This one, then if it breaks here, I'll have another stab at it up here. But the third option is to short it down here, looking for the breakout of 1800. Yeah, but that's where retail traders go wrong. They wait for confirmation. You know, it's moved 120, 150 pips down, and then they're trying to short it. I'm like, well, why didn't you short it 150 pips ago? Why didn't you short it at the high? Basic principle of trading: short it when it's high. Go long, buy it when it's low. Sell high, buy low. What more do you need to know about trading? But stuff gets in the way. You overanalyze it and get nervous. So that's why he's. That's why I keep talking about Rob's strategy, because I like it. He'll scale in with a little risk. He goes, "Oh, we'll take a little stab at this. We'll take a little risk here and we'll short it. And then if it gets up here, we'll have another go. We'll probably put bigger risk on because our stop loss said are going to be slightly above. And obviously, then if it breaks all this and starts looking at changing sentiment and going bullish, then we'll just stand aside, and say, well, this move's done. And so that's how you trade. Trading 101, and hopefully that makes sense. But shorting it down here on the breakout, that's just dead. Why do you want to get down here for? What about up here? What are you waiting for? Do it or don't do it. Do it, don't do it. Do it, don't do it. Do it, don't do it. But I mean, that's just personal preference. You know what will happen? It'll get down here, but I'll have taken some shorts to get down here, and I'll look to take some profit off. I might even then leave a little position on because I've gotten in higher up. I can afford to put my stop to break even and allow it to test the 1800, allow it to break, allow it to faff around down there. I don't have to wait for it to break before I get in on it. And then I guarantee more new traders will come in, and they will wait for this to break 1800, and they'll wait for it to then bounce back up to retest 1800 before they go short. So the break and the retest. Break and retest, using maybe, I don't know, an hour time frame. Let's have a look at the hour. That is the hour. The break and retest, which is getting in further down, so let it break 18, go down to 1790 or something, and then come back up, test that, which is acting as support now as resistance, and then take the next leg down. So there are many different ways to trade it. To be perfectly honest, there's no right or wrong way. It's all subjective. I've just given you some personal preferences as to how I would like to trade it and how I do trade it. That same concept that I've just explained to you is how I applied it here. I didn't short at 1850. I said as part of my trade plan, I want to short it on the premise that it's going to break 1850. But it doesn't mean I'm going to get in at 1850. I want to get in ahead of that. I want to be ahead of the game. I want to get in when the institutions get in. I want to get in where they're going to get in and move the market from. I want to get in from the start. And this looked like a good starting point because it sort of made the little pump pull back and then stalled. So let's have a go. Let's put a little stop above, and worst case it just carries on up and change sentiment, and then it's not going to break the 1850, without overthinking it too much. But we got in ready. So then when it did break 1850, I was like, yeah, great, making money. We can bank some profit. We can move our stop to break even, which is up here. Even if it got into 1850 and rejected, I still would have been a couple of hundred pips up. My targets were 1870 for about 50 pips, so I took some profit on Friday evening. My next target was 1860. And I said, if it breaks that area, then I'm just going to hold it. And it did. It tore through, so I just held to 1836 for another 240 pips or so. For me, in percentages, it was like a 2% here and there, and 2% there, 2% there. 1.5%, 2.5%. Add them all up, and you've made a 7, 8, 9, 10% trade, and it's quite nice, really. All because we had a plan to go short, to want to short gold, but we took that plan a step further and we put it into action. We didn't just say, oh, it'd be nice to short gold if it does that, but then you haven't really formulated a plan of, well, okay, that's good. What happens if it does it? Are you going to be ready to actually put the trade on? You're going to be brave enough to pull the trigger. In order to be brave, you've got to have a trade plan. You've got to understand where's your stop going to be, where's your entry likely to be, where's your how much risk are you putting on the table, and then you make it a reality. And that's trading. Otherwise, all you're ever doing is dreaming, and You need to take the dream from that post-it note that we had. That's a good one, isn't it? That post-it note. That there. A dream written down with a date becomes a goal. I really like that. I thought that was really appropriate. And then a goal broken down into steps becomes a plan backed by action becomes reality. And I thought that was really, really quite fitting. Why is it doing that? Oh, okay, let's move you there. Yeah, cool. So 120. What do you think about today's session? Has it been productive? Do you guys think you've picked up a few points? Does some of it make sense?
Yeah,
You don't.
I think I joined a bit late, but there was definitely some good progress.
Yeah, you don't have to worry about. Don't have to worry about it too much, do you? Just as long as.
I think my problem is I literally got all the technical skills down, but when it comes to executing, I literally sometimes you just watch it and then it's like, damn, you know, everything you just said is going to happen has happened, and then it's already gone 10-20% profit. Are you going to enter now?
Yeah. So with that, what you can do is accept the fact that initially you might watch a few, and even 5 years down the line as a trader, you might continue to just watch a few and get comfortable with that. I think, well, it's a never-ending buffet, so I don't need to worry about it. I didn't get that one, I'll get the next one. That's not a problem. It becomes a problem if you're not acting at all, if you're failing consecutively. So then at which point you'd need to say, okay, I need to do something to make that change. What can I do? Right, okay, I've done my technical analysis. I've looked at what's going on fundamentally. I think that gold is going to break and it's going to sell off, and we're going to go short. And we're going to test 1850, and we're going to break, and we're going to go down to maybe 1800. So there's 500 pips that we could possibly get if we get in a bit late. Doesn't matter. So I have that 500 pips. I think I can make some profit. I can take some profit out of it. So you talk yourself through what if scenarios, accept the fact that it's if it does do that, you're going to make some money. Accept that as a fact. You are the market. I am the market. When I'm in the trade, I am the market. I know that I'm going to make money from this setup, and so okay, yeah. So you've established that. That's not an issue. Risk is an issue. I really don't like losing. Nobody likes losing. It's part of the game. Still don't like it. Okay, so how do I deal with that emotionally? Right. Well, let's say I want to short it. I'm going to put an order on. Orders are good. Orders sometimes work. But then it's like, well, I don't want to leave the order on because I'm a bit of a control freak, and if I put the order on, what if it triggers me and then it just bounces off it? So I've got to sit here and watch. Okay, so you sit and watch because you want to see on a smaller time frame. I'm not going to look at it minute by minute because that's just going to do my head in, and I'm just going to be subject to all the emotional roller coaster of the noise of the price action, and it's too much. I can't deal with that. So, which time frame's suitable? All right, let's what's the time now? Look at the time. 1:23. Okay, 1:30 is the next time. Let's look at the half-hour, 30-minute candles, 30-minute time frame. Let's see what's going on there. Maybe draw down to a 15-minute as well and a 5-minute because it's 1:23. Let's see what's going on in those time frames. And just do it like that. It's a process, and the process doesn't have to be exactly the same every time, but it should be pretty consistent and pretty much what you do. And you probably do all this as well without really even thinking about it, and you probably do it and think, and so just stop for a second and say, actually, yeah, I do that. You probably say, yeah, I do that, and you can relate. I do. So maybe write it down just to reinforce the belief systems. I am actually doing the right things here. I am actually I am actually looking at, I'm doing the right process, and I just need to note it down to recognise that I have actually got a process. I didn't realise I had a process. It just seemed like, you do that anyway. But that's a process. You're doing it. You're doing those things. Okay, write it down, journalise it, and then it just reinforces it. And by reinforcing it, it just makes it real. It turns the dream, the plan, it turns it into action, and that just helps. That's it. You're doing it, and you're doing it without realising you're doing it. And you think, well, is that it? Is that all I have to do? Yes, that's all you have to do. What do you think you need to do? You don't need to go to university to study for a degree for 3 years before you can do that. You're doing it. Just that's it. Analysis paralysis. That's what that's called. You overanalyze it to oblivion, and then you don't do anything because you're just like, oh, did I do it right? Did I? Oh. Yeah, so you've gauged the markets. What's it doing? It's bearish. Gold is bearish. We're looking for shorts. All right, good, done. Anyone trying to take longs, you can just do one. Good for you. You're trying to take longs. I'm happy for you, but I'm not interested. Me personally. Let's see what it does. Let it finish doing the shorts. Let it go turn bullish, and actually show us bullish intention like here now. Let's see it break up. And then if it does do that, I'll be interested in shorting it at the 76.4 around 1825, somewhere like that. I did do a couple of little scalps here, just one there as well. You know, a couple of moves. The scalps were still sort of 20 pips, 30 pips, pretty decent for a scalp. Because this range is so big, we're getting these small little candles. They look really small, but they're not. They're actually giving us 20, 30, 40 pip moves, which is very good, very generous. Stop loss is above here at the moment, and that's it. If it breaks up, we just get out of the way and leave it. I might even then put my stop loss on the move my stop loss now on this trade that I've got going on up here. The stop's at 1823. It runs a risk of hitting the stop loss and then going back down to 18. But you know, the longer it's taken to get to 1800, I've been shorting and repeating additional positions and milking this move and rinsing it. And so the original position that I've got left open is now not my main position. It's actually just a bit of a bonus because of everything else I've done. Been proactive with this price action to make sure I made money from it and capitalised. So that's kind of nice. Again, a lot of that is mental, the mental thinking, which can sometimes give you a bit of peace of mind as well. You know, when you've made money and you've got profit on the table, you do feel, it does massage your ego. You do feel quite accomplished. You know, it does make you feel good. It's you know, accept it, celebrate success. Don't take it a step too far though. Don't get too carried away and think that you're invincible and that you can't lose. You know, obviously that's on the fringes of grandeur and delusion, and you know, so it's a fine balance. And this is what this game can do to you. It can really mess with you and really play and toy with your emotions. I wrote a piece about, you know, basically don't be a slave. Don't be the market's bitch. Don't be a slave to the markets. You know, sit here all day, every day. Let's just put this. Where are we going to put it? Stop loss. I think I'm going to put the stop loss at 1823 is good though. It's above the 61.8. 18. I just want to be done with it though, to be fair. So we'll just do 18. Oh, we'll leave it. Just leave it. 1823 is all right. We'll leave it. Like I say, it's not the important trade anymore. But that's all done.
Kind of news coming through in the next minute.
Yeah, it is, isn't it? So we're gonna maybe spike up and then we can sell it all down again. Who knows? So we'll see what happens.
Yeah, price just spiked up like 15 pips in
Yeah. Yeah. This is the one. Let's move that out of the way. This is a good one while we're waiting for the news to do something. Yeah, this thing. I did a podcast on this. It's about you know, mentors not telling you that you are you have emotional issues with the markets because you're the market's bitch. You're a slave to the market. Maybe I should say that. But you want to know the real reason why a trader trades with emotion? It's because it's because of that. So let's look at why. So scroll down. Oh, yeah, here we go. So you think you're Mr. Independent Trader who doesn't want to work a full-time job but wants to enjoy a work-life balance. And I'm like, yeah, whatever, because, you know, at the end of the day, you're not doing that. you're not coming in and trading a session. Again, Rob put in his video, he doesn't like to trade beyond 12 o'clock, so he gets up super early and he'll do a little bit, but then he doesn't like to trade past the morning session. For him, he's what is he, 2 hours behind the New York time zone. So
He's from Alberta, right?
I think so. Yeah, he's in Canada, isn't he? On that side,
Edmonton.
Edmonton. Yeah.
Yeah.
So
So yeah, he's 2 hours behind.
So he wants to be an independent trader. He doesn't want to just say it, but then sit there 10 hours a day, 12 hours a day, day and night managing positions. Sometimes you might have to do that. If there's a good winning position like this on the go, then of course you're going to be called upon to pay more attention to it and to have a little look to see what is going on. But otherwise, come in, trade a session, make your money, job done. Turn off the laptop, turn off the computer, walk away, or do some back testing, do some other behind the scenes work, self-development, do some psychology stuff. That's what we're saying. Otherwise you're just a slave to the market. You're pretty much trading from open to close through the Asian session, London session, New York session. You're trading every move, every tick. You allow price action to rock your thoughts and feelings back and forth. So when the market treats you well, you feel great. When it shows you no respect, you feel crap. When the market's slow, you're at a loss. You don't know what to do with yourself because you haven't got a life. And you just sat there and then you end up doing things like boredom trading. There's nothing happening, but you're just putting a trade on because you're bored. And you might justify it by saying, oh yeah, I'm just doing some back testing. It's like, of course you are. And so if you acted this way in any type of other business or relationship, that you'd be teased. Your friends would take the mick out of you and say you're someone's bitch. But with the markets, you tell yourself it's dedication and it's a passion for trading, and that's how you justify putting so many hours in at the screen and allegedly backtesting. Like I said, it's just and all you're doing, you're probably over trading and you don't realise you are. You've got 4 positions on in a market that's dead and you shouldn't be trading, and then most likely just chasing losses as well, and it's just a mess and you don't even realise because you've not really got that experience. But after you're doing it 2, 3, 4 times, then you kind of think, actually, that's not how I want to trade. That's not the kind of trader I want to be. So, yeah, it's like with any relationship. We said, stay in control and play when you want to play, so that you don't get played. And this takes a set of rules, a solid trade plan, a watertight strategy, all to give you the very slight edge. Because with all of that, it's only going to give you a slight edge after everything you do. It's not like it's going to, change it all for you and you're going to be winning every single time. Maybe after 5 years. But it's about you. You are your own. You can be your own worst enemy. And so yeah, have a trade plan, a set of rules, a strategy that you can kind of work with. And yeah, if you haven't got any of that, that's what you should be focusing on, not actually pulling the trigger and putting trades on, because you're not equipped to put a trade on. So if somebody says to you, "Here you go. Here's the keys to my Mercedes, but I haven't got a license." Oh yeah, don't worry about it. Or I've only got a provisional license. I've only got, I'm still learning to drive. So all right, I'll come with you. But if I don't come with you and you're going unattended and on your own, it's the same thing, isn't it? You might be able to do it, and you might have a bit of luck, and it might be good, and you might have 30 near misses and manage to go from point A to B without crashing. But is that how you want to do things? Because that's how you're trading. That's what your trading looks like. You just, what you're doing. It's real money as well. The other thing grates me as well. You've got to have an inexperienced trader. He's inconsistent. They're not making money. I said, why don't you use a demo? I know it doesn't address the emotions. Yeah, but you're losing. You're not making any money. Sod your emotions. You're not winning. Use a demo and learn to trade first.
Using a demo helps you separate your emotion from what you're doing too.
Which means you then focus on the task at hand because you're not emotional. You can't make rational decisions when you're emotional. We know that because that's, you know, when we argue with our partners, we have a disagreement with people. It's hot-headedness, and yeah, it's sometimes not the best.
Yeah, for sure.
Then you're going to try and trade like that. So what's that? That's common sense again. We're coming back full circle.
So when trading after 12 beers is not a good idea.
No, that is very good. Trading when drinking is absolutely fine. I love trading and drinking.
Are you serious?
I'm totally serious. Yeah, I love it. I think it's fun. It's great.
Confidence level goes through the roof.
Oh yeah, that's what I'm saying. It's a release though, isn't it? It's a bit of fun. I don't get too carried away.
Like hitting on 17 in blackjack.
Yeah, that's right. So each person has to have some sort of a vice, some sort of get out, some sort of escape. You know, you look at some videos of traders like Monday to Friday, keeping your emotions in check. Come Friday afternoon, you know, they're letting rip. That's why I would say to you, Friday is my favourite day, because Friday afternoons, Friday evenings, often Friday, maybe not even bother to trade and just look to go. And if you're in a city or somewhere where there's a vibe going on, you see all the people coming out from their office jobs or just finishing work, and the tie will come off, and people are standing outside the pubs having a drink, and it's just a very nice atmosphere. Whether you drink or not, you know, it's not, that's not what we're talking about really. It's about the ambiance. It's about the atmosphere. It's about Fridays. Go out and celebrate. So maybe take the family out. Treat yourself. Treat your family with your winnings, with your hard graft that you've, you know, celebrate. So you've got that balance. Celebrating success is very, very important in this game. So there needs to be some way of releasing the tension. So the gym is good, meditation's good, eating the right food, sleeping the right amount of hours. You're an athlete and you need to keep yourself in check. And if you've got bad habits, you need to kind of whittle them down a bit. You know, you can have cheat days. Just try and reserve them for the weekends. So everything in moderation. Because I'm not perfect. I know what my strengths and weaknesses are. I accept who I am. Accepting is half the battle. And then when it comes to trading, I try not to let things interfere, because I think, well, actually, I've got a job to do here. I need to just focus for a little while. But you can't keep that level of focus up for hours and hours. So that's why over trading is not a good idea. And that's why when you've made your 1%, you should just finish. I know then it's really hard to pull yourself away. But it's like step away from the screen with your hands up and just, you know, go and do something. That's why you need hobbies. Trading's not a hobby, by the way. Trading is a business. You treat it as a hobby, you know, hobbies cost money. You spend money on hobbies. So if you treat trading as a hobby, then it's money. Yeah, exactly. A shitload of shit expensive. Yes, exactly. That too. I shouldn't swear, but it's a very expensive hobby if you make it into a hobby. It's a business. Treat it as a business. You need things in place to treat it as a business. It'll teach you a lot about everything that you want to know about yourself, about the world, about how to behave, just everything. You learn so much because you are called upon to you know, you're always being called upon to deliver, to achieve, you know, it's just a very, very demanding, I don't know why, but it just is. It's a very demanding business to be in. Sometimes it takes everything that you've got to pull things off, but that's what makes it sweeter, right? So, yeah, it's a lot of it is psychological. That's why we say it's 80%, 90% psychology, because it really is. Anyone can put a trade on and pull the trigger, put the stop loss on. I gave you a perfect example with this one. This is funny. This week, so Friday, we're saying, okay, we're going to go short on gold. Okay, so what happens between here and here? There's a few traders in the group here that couldn't just put some trades on and leave it and walk away. No, they had to faff with them. Like I said, like a 5-year-old going to get their hair cut and being told to sit still. They just couldn't do it. They were like taking longs, they were going short, they put positions on, getting stopped out, jumping back in. It was a mess. And it wasn't one person, it was a few people doing the same thing. It's understandable. That's what happens. You just sit on your hands, Leave it alone. Stop touching your trade plan. If you've got a trade plan, you won't mess around. Believe in your trade plan. Trust the process. That's what they say. Trust the process. Trust what it is you're doing. If you don't, then yeah, it's not going to work, is it? So we're just watching now the retracement, 61.8. So yeah, 61.8, 16. Where are we at? 15. I'm going to take one here. Market's opened. I'm going to take a little short here. Let's get a short on. Small position. Small short on gold. Yeah, I'm going on gold. 15 something. There we go. Short 15.19. Let's drill down to a 15 minute. Yeah, so we've tested the highs. We've broken out the highs. We're in a bearish downtrend. Lovely move up. And yeah, look at that. Bang, boom, bam, boom. That was good timing. Wow. 3.5 grand. We'll take that. I'll take that profit off that move. There's a quick scalp. What was that? That was about 20 pips. There you go. So it happened so fast. I know. And that's what happens when you're trading for such a long time. You just know. You just kind of know. You are the market. You just know what's going on. I can give you a sermon for an hour and then look at a setup and go, right, I'm going to take a trade there. Why? Because I've got not my 61.8, sorry, my 50%. It hit the 50, bang on. Let's short it off that.
That was nice. I just got a quick scalp of that too.
Yeah, so just take some profit. Now it'd be nice if this can follow through and actually make a move now that the news has come out and all the rest of it. But we still have, to be fair, we still have 50 minutes to London. But yeah, it'd be nice if we can get a nice little pump to the downside and have it all curl over now that it's pulled a decent retrace to 50. And I'll tell you about price action here as well. This is valuable. So we have sat here. Hey Alex, I think the screen's froze. You had no audio. You had half a screen. Can I see trading goals? Oh, I'm looking at the wrong. Oh, sorry. Am I? No, that's not. That wasn't my fault. For a change, it was me. Didn't have. I had it on the wrong screen. Sorry. There you go. Sorry, but hopefully you heard me take something there. And sorry if you missed it. Apologies. See, there you go. So I wasn't giving it my full attention, even though I think I can still do things multitask. Multitasking is a myth, by the way. Women don't do it better. Everyone does it the same. It's a myth. You're not giving 100% to a task. So it's never going to be perfect, is it? The probability of doing it properly is greatly decreased because you're multitasking. You can't, trying to juggle 2 or 3 things at the same time. So I'm talking to you guys and I see a setup, but I didn't realise that I didn't have my screen shared. This screen shared, which is I had it on the left screen, my left screen instead of this one. So if you'd seen it, maybe that would have helped you get in on short that and understand why I was shorting. So yeah, thanks for letting me know that. But see what I mean? So I wasn't looking. So, but yeah, still made some money though. I think that's the important bit. But yes, that's it really. It's interesting, isn't it? You just kind of have to focus, and I appreciate when people go away and spend a week or 2 on their own and you don't hear from them, and then I'll message them and say, are you okay? And they'll be like, yeah, no, I'm fine, I'm just taking a bit of time out. And Rob took some time out and then he came up with this strategy, and something like this he would have shorted. So to get back to price action, 38.2 was holding, test, came up, retest, came up, retest. It's made a good case for resistance here, which is really good. So now we've broken up out of this resistance and it's now acting as support. So we've had this first pump up to the 50%, at which point I shorted it. And then we took it down to previous structure, 38.2, because that's now providing support. What was resistance is support. And that's a simple bit of price action. Really interesting though, which I'm sure you can see that. And so you can see why it reacted off that level, went there and bounced off it. And it's just providing that support now. So what we need to see really is this resistance hold still, the 50%. Ideally for this to break back down below 1812, which is 38.2, and to keep going down, and to have the bears maintain and keep control of this bearish price action. So we've had and allowed for a retracement 50% move. So it retraced to 38.2 and tested it several times, and then it's actually broken above to the 50. So now that might just be a liquidity grab to the upside. Break out of this, suck in a few buyers that are trying to go long. Bit of liquidity grabbing up here. They try and buy this move up here. Guaranteed there's going to be people buying here, especially retail traders buying. And then we took it short, and we're looking at going with the trend as being our friend at the moment. Now, clearly, if it breaks this area, then we just sit and wait for the next level of resistance. And so that's what we do. So we took a bit there. Now we just wait for the next setup. So if you want to scalp, it's cool to scalp, but you don't need to be like, there's scalping and there's scalping. Even with scalping, you still have to know when to get in and when to get out, and just appreciate where the levels are. So we've identified on a higher time frame, on the 1 hour chart, this is the area, right? This is the area of interest. And you can see the way it's reacted and struggled around that 38.2. And then we had an impulsive spike up, which we're now trying to establish and ascertain whether this is in fact the start of a continuation long, a breakout of this 38, and going to use this as support and start its merry journey up as putting a proper retracement, or whether that was just a liquidity grab. People trying to short it at 38.2, like some of you did, right? Some of you did do that. You're not alone. I did as well. Shorted it off the 38.2, but I took the profit. I didn't hold it. I took the profit, and that spiked up, and in an attempt to maybe scare those people or stop them out, and take them out of the game before dropping. So I'm hoping it just did that liquidity grab, retracing, therefore retracing 50% of this move. And so then it can continue down. So once we get the confirmation, which will happen maybe if we use a 15-minute time frame, here we go. So that's good. That's positive. That's encouraging. Right. So we're reading price action right now, and we're trading live, and this might be beneficial for you guys. You might be able to, see how we walk through trading, how we analyze the market and look for the perfect opportunity to trade. So like I took a good trade there and got in at the perfect time. I'm a very impatient trader. I know that has been I'd say it was one of my weaknesses, but I've managed to turn it into one of my strengths, because it means I don't have to sit here for hours and hours and hours. I can just come in like that. Look, it's retraced 50. Let's short it there. Bosh. Like within seconds of putting that trade on, it just dropped straight into profit. Sniper entry. No drawdown. Money made. Job done. I can go now. I've just bagged £3,000. I can go and see if I can withdraw that £3,000 and go and spend it on something. If I was 20 years old, maybe I'd go and spend it on I don't know, what can you buy? A Rolex watch? And then put it all over social media. Yes.
Don't give me any ideas.
Then Harvard. And then Harvard again.
Yeah, no, you get my point. I mean, it's just, but the fact that you can even think that way and talk that way, and it's not showing off, is it? It's you're having a laugh with it, but it's because the opportunities are there to do that with this business. You've got those opportunities to do that, but always try and think a bit bigger than that. I mean, I think when people come into money, success, that's initially what they probably do. New money, like buy stuff, because that's what you do, isn't it? You go to the shops and you just buy stuff. Do you really need it? Not really, but it's just what you do. Stuff. I need more stuff. I haven't got enough stuff. And then you sort of do that for a while. And if you were to surround yourself with old money, with people that have grown up with money, second, third generation, maybe those that live in central London, Mayfair, Chelsea, live in multi-million-pound houses that have been handed down to them. They drive modest cars. They might have one nice car. and they might have some nice bits and pieces, but they don't shove it in your face. It's not. They're not gangster rappers, are they? They're not blinging it with big chains and big Rolex watches, and it's not. You know what I mean? They don't want to make. They're not inspired by music videos like the new money people are. It makes sense, doesn't it? It's just each to their own. I think you will transition though. I think you will go from wanting to be like the rock star, pop star, blinging it, to being a bit more, okay, I'm actually going to buy myself a nice house and have a bit of land, and maybe do a bit of gardening, plant some organic vegetables and have some fruit trees, and maybe be elaborate in that, maybe in terms of luxury, have a tennis court if you're into tennis, or make sure you have a swimming pool and a few little luxuries like that, maybe a little bit more, but it's all low key and it's all in the privacy of your own home, and it's having creature comforts. Maybe have your 70-inch, 80-inch, yeah, 80-inch TV, exactly, yeah, buy a few more monitors. I was thinking New Year's resolution, I might upgrade my desk and upgrade where I'm sat, because again, it's fine, it's functional, I don't really care, it's doing what it needs to do, it's really good, I'm really happy with it. But you know why? I was thinking about it today. I took a photo and I posted it to my groups, and because I put myself out there, it made me feel a bit self-conscious. And I was thinking, does this look good enough? Does this look professional enough? I know that by putting yourself out there, you're going to be judged, you're going to come under some scrutiny. I'm human. I'm going to be susceptible to the same emotions and feelings, and sort of think, it's all very well saying I don't care. But so I'll accept it for a moment and think, yeah, I wonder what people will make of my desk where I'm sat right now at home. And then, after posting it, I thought, okay, cool, I've done it now. Am I going to lose any sleep over it? No. Is it going to affect what I do in the next sort of 10 minutes, half an hour? No, not really. I'm of an age where these things don't really affect you as much. They still do. You just, you learn to filter things out now. You know what's important in life and what isn't. When you're 20 years old, everything's like, oh my god, sort of like panic. The kids, you still got the kid mentality, and that's how they sort of speak and behave and react, and it's all like self-conscious and worried about what people think, and then as you get older, that just sort of dies off, really. You care less, don't you? It's just one of those things. Which is kind of nice. So I think with trading, it's good to have a mentor and have someone that you can bounce your ideas off and report to. And I said to people, it doesn't matter how old you are. I said to people here that if you want to share any charts or anything, just you can send me the stuff if you want. I'll look at it and I'll help you and give you some pointers. Hopefully these live sessions will be good, so we can take some trades and make some money, but just look beyond that, look behind the scenes, how to set yourself up properly so that when you do take a trade, you're not scared, you're not anxious, that you've followed a process that's allowing you to win this. So yeah, and have that winning mentality that when you do place a trade, you think, I've won this already. I've already made this money. As soon as you take the trade, I know I'm going to make money, and have that kind of confidence and inner self-assurance and belief. And that's what you need, because this game is very much about dealing with uncertainty. There was something here I wanted to share with you, something to do with how to achieve your goals. I don't know if anyone saw this. While we wait for gold to break, it's thinking about it, isn't it? 15-minute time frame this is. It's thinking about breaking that 11813. If it breaks, we short it. We short it down to like, I don't know, well, we'll put some fibs on this range as well. Let's put some fibs on this range quickly. Oh, why does it keep doing that? It's just not long. This is very annoying. Okay, how do I... It's too many things showing on my screen. It's not letting me move. No. I managed to get it and then it's done. Alright, I'll tell you what we'll do. We'll put that there, and we'll put that there, and we'll move that. I want to put some fibs on this range, so let's move that over here. Get rid of that one. Put that there.
What platform do you trade on?
Sorry, say that again.
What platform do you trade?
Well, I've got several accounts with several different brokers. So this stuff here, this is some algorithm software, proprietary software that you buy, you pay for, you customize, and it has things like certain indicators that give you certain overbought and oversold, overextended and under, overbought and oversold. These arrows, for example, give us some sort of indication as to whether stuff's bullish. So right now on this 1 hour time frame, we've got a lot of green showing, which is telling me that we're looking to.
Or if you're aware that how to achieve your trading goals.
Oh, he's still on there. Yeah, okay. Yeah. Sorry, that was me again. There you go. So yeah, here this software is saying bullish, 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 or pushing up, pushing up, pushing up with the green. So here we had a bullish confirmation arrow, but it was still red, still bearish, still in a downtrend, so we didn't take that one too seriously. But here we've started to kind of level off at 1800, and we are starting to see some impulsive movement to the upside. And green candles, green bullish, so we need to see some red again before it continues to the downside. That's a 1 hour time frame, and if I look here on this chart, let's put some fibs on this range.
On the other chart, what's the blue candles indicate?
Boomerang. So what goes like a yo-yo move, so it's basically saying, alright, we're going up, but there's still a very strong possibility that this is just a pullback. It's just a push up, and it's going to actually drop and fall over and go down. So what we do here is we'll pull up this range, this price action. We understand that this has already gone to the 50% and bounced off that quite nicely. So we'll get some fibs. We'll forsake the rest of the fibs. We're only interested in this low at 1800. And because this is a 15-minute chart, you could do it on a 15-minute or a 5-minute or 30-minute. We know that these fibs are subject to change. For example, it could change in the next 5 minutes or 2 minutes. If we were to see a sudden pump up to take this high out, then we'd have to reset or just move this zero line up a bit to wherever the new high is. Just move it, just adjust it accordingly. So that's the difference with plotting fibs on a smaller time frame and a bigger time frame. As a trader, you have to change your attitude. So yeah, you change it when you're trading. It's serious and it's grown-up time, and you get on with it and you make your money. And then when you've made your money and you want to spend some of it, or you want to go and celebrate success, you need to do that as well, and not in equal measure. But you don't want to spend $3 if you make $3. Spend $1 of it. Put $2 in your bank, or put a grand aside for other ventures. Maybe diversify your portfolio. Look to invest it in other things. Maybe save up to buy a house. Maybe put put $1 or so back into your account to compound your account, so you've got more trading power, which is really, really important, and a very, very important thing. Personally, I would spend as little as you can for the first year or two and compound your account. Save as much as you can. Build up your 10k pot to 20k to 30k in the first year. Year 1, 30k. Then year 2, that 30k, you'll end up getting it over 100k in year 2 if you repeat what you did in year 1. And then by year 3, you'll be looking at anywhere from 100 to 400, 500k in year 3 after 3 years. Starting with a 10k pot. If you start with a 20k pot, you just double that. But if you're serious and you do it and you compound, in 3 years you should have a huge trading pot. And that's on the premise that you maybe only skim the profits a little bit of what you need to maybe live frugally, maybe just spend on paying your bills, but not going out and just being lavish every weekend. But yeah, you know, be serious with it. And then the weekend, treat yourself. Take the long weekend off. Go away for a weekend every now and then. You know, do stuff. Take a month off if you've worked really hard and had a really good month. If you make 50% in a month on a large 500k account, for example, you know, you've made enough there that's probably equivalent to 4, 5, 6 months worth of trading if you base it on making 5% a month. And as a passive income, you could say, right, that money, I'm going to take that money out of my account and I'm going to live off that money for the next 3, 4 months, and that's the only money I'm going to spend. And then I'm going to do some trading sporadically as and when I feel like it, if something interesting's happening. But then I'm not going to just trade every day, because I'm going to live off this money and I'm going to go and enjoy my life. I'm going to go on holiday. I'm going to go and prop myself up on a beach somewhere for a month and maybe do a bit of trading from there. And then just keep topping up your trading, your trading account. Treat trading as your ATM machine and just, you know, do the odd trade here and there. I remember before I was married, I travelled a lot and lived out of a suitcase, and it was great. And just put myself up on a beach and had 2 laptops and sit at the bar. Doesn't matter where you go, the most obscure places in the world, and they've always got Wi-Fi and the internet's great. You know, infrastructure's probably really bad, but everyone had Wi-Fi and everything was working fine. Didn't matter where you were. Get a couple of laptops, whatever laptop, stick it on, do some trading, trade high impact news events, and just trade those events like this. Gold, you make your money on that. Shut your laptop for another week, you're done, and then go off and treat life as an adventure, and do that when you've got very little commitment, and then, you know, I don't know, just own it and make it what you want it. Or you could just do the social media stuff. The guys have got McLarens and Lambos, and that's, you know, if that's what you want. I think ethically I can't really do that anymore. I've got kids now. When I was younger, I was guilty of that, joining a supercar club and driving all those fancy cars. Now I can't really justify sitting in a 5 litre V10 engine and saying I'm going to pollute the world with this dirty engine just so I can go fast and look cool in an uncomfortable ride, because they're uncomfortable and it's so low, and that's just me getting old, I think, and having kids and being a bit more responsible as a person, and thinking, well, I've got to consider my kids. What they're going to inherit this world which I've polluted because I wanted to drive fast and look cool. You know, and when you think of it like that, I think your attitudes shift. And now I think these guys look a bit of a div, really. They just look a bit, I don't know, just kind of, it's just not a bit of me anymore. Nice to have, I guess, but I think that's for when you're 20. But appreciate that the guys on social media, they are only in their 20s. One of them's 22 and he's got a couple of nice cars. You know, I'm happy for him. Really cool. He's done well. He's worked hard.
A lot of them spend good money on good production videos too.
Yes, that's it. Exactly. They're doing their thing. They've got a good little business enterprise going on. They're 22 years old and they're smashing it. And it's so hats off to them.
They don't trade.
Yeah, maybe some don't trade with real money, real accounts, and they don't need to because they've got their 200 subscribers paying $150, so they're making $30,000 a month from their subscription service. Then they bolt-ons, add-ons is the upsell is selling their courses for $300 or whatever it is. Merchandise. You know, even on Wix Don't Lie, they've got merchandise and their big square calculator thing. It's like, you don't need any of that. Like, Jesus, it's just marketing. And baseball caps with a bull on. I mean, some of it's quite cool. Like, oh, that looks cool. I think, oh, maybe I should get myself a mug. I was thinking I might get myself a coffee cup. This is what happens as you get older. Your attitudes towards these things shifts. It's just life, I think. When you're young, you buy into all of this, and you're like, I want that, I want that, I want that. But you know, that's when my children, my children do that. But they're children, and I can appreciate that. They see a commercial, an advert on the TV for some toys. I want that, Daddy. Can I have that, please? That makes sense. But you're not that age anymore, but you still want to be that way, and I get that. That's nice. You want to be young, and I want that. I want a piece of that. I want to do that. As you get older, you're like, yeah, don't really bother me. Don't want it. I'll pass on that. And I think trading can give you everything you want, and when you finally get everything you want, you might just be like you've always been. You might have it all and think, actually, this isn't really what I want. I don't actually need it. Wants and needs are very different, aren't they? It's like, actually, what do I really want? For me, it's like good food. I like cooking, and I like making my own food and being healthy. I like to go to the gym. I've got pay for, like, I've got couple of husband and wife personal coaches. They do things like CrossFit and stuff like that. So they're really good, and stuff like that. So I'll make sure I book in sessions with them. So it makes me go because I'm reporting to them. It's that whole Pearson's Law thing. If you report to somebody, then you're more accountable. And so 3 days a week minimum, I'm always with them: a Tuesday, Thursday, and a Saturday. And then if I can squeeze in other times. So 3 times a week, gym, and eat well. And then the other things like to do, want a swimming pool where I can just swim. That's it. In terms of luxury, cars, they're okay. Cars are good, nice, but I'd rather fly. So go to the private airports, the little airfields, and just jump in a plane and go for a bit of flying for an hour or so, or go and see an air show. Go in the airplane to the air show. That's quite cool. Just stuff like that. You just start. The world opens up to you, doesn't it? And you start looking at other things, and so then, yeah. What really turns you on changes as well. And I think trading, you need a mentor. You need to have guidance, and you need to answer to somebody, because otherwise you sit here and you hide. You hide behind your screen in your charts, especially when you're making mistakes and things are going wrong, and you're sat there and you're like, oh shit, what do I do? And you don't know what to do. You've never been in this situation before. You're your own boss. You wanted this. You wanted to be independent. Now you're like, oh shit, I don't want to be so independent. Where's my mummy? It's like that almost. It's like, damn. So this is where how to achieve your goals. Okay, so we talk about the Chinese bamboo. I've talked about that. We talk about Pearson's Law. This is important. So when performance is measured, performance is improved. So if you want to lose weight, you weigh yourself on the weighing scale, and that way you're helping you're taking action to lose weight because you're monitoring what you're doing and how you're doing it. When performance is measured and reported back, the rate of improvement accelerates even further. So, meaning if you track it, it will improve. But if you track it and you tell somebody your results, it will improve exponentially. So with losing weight, if you go to a Fat Fighters Club every Saturday and you weigh in there, you feel more self-conscious. You're more accountable because you know you're going to have to answer to somebody. So it makes you work that little bit harder. You've got a mentor. You've got someone that you talk to. So what you can do is have trading buddies. You could I don't know, to work with another trader and bounce ideas off each other. That can work. I've known it to work. I've seen it work. I've done that as well. And yeah, that's quite good. So then you can then have a trading plan, keep a trade journal, implement correct risk, and these things are there to help you track and monitor your performance. And then much like the metric data that's available when you trade these FTMO accounts or accounts like that, my FX books, you can use the metrics to monitor what you're doing, which is cool to some degrees, and it may help improve your performance with your trading, yes. But imagine, like, you're making mistakes and you're having losses and you're having a bad patch. Imagine if you then are reporting your losses and your screw ups and you're having to tell someone about it. Do you think that might just add pressure and make you follow the rules a little bit more? Do you think that way it might just help you not hide behind your charts and behind your screen and do naughty things that you shouldn't be doing? Do you think that might help you actually then follow the plan that you've set yourself? Keep a journal that you know you should keep. The basics, basically. Do the basics, not just talk about doing it, but actually do the basics. So that's what that is, Pearson's Law. It's really good. How to exactly, you know, how exactly can you focus on achieving your goals? So I've written this, and then I've audioed this in my podcast so that you can listen to it and read along. This is the transcript, and there's a couple of good things in there, and it just stuff like that in your spare time when you're sitting idly waiting for this gold trade to drop into profit, which it's trying to do now. Whilst waiting, you could be doing other things, like a bit of reading, a bit of researching, a bit of self-improvement. This is self-improvement. So yeah, there you go. All right. What's the time? 2:10 past 2. I think you guys need to rest your eardrums because I've got no voice left. Sorry about that. Hopefully you got some stuff out of it and got a bit of an insight into what I do and how I live. And basically, I've just copied other people that have had these similar winning formulas. It works for them, and I figured, well, maybe that will work for me. So I've taken some of the good bits and made it my own. Maybe you guys can do the same. You can take some of the good bits that I give you and make it your own and have a better life, really, and just be happy. And because we live in this world of instant gratification, but you can't instantly be happy. You can't just say, I'm going to be happy today and make yourself happy if things aren't going right, or I don't know, if it might not just be that easy. In trading, you can't just say, I'm going to be rich today. Today I'm going to make £1 million. Because I live in a world of instant gratification and I want it now. And, and it just doesn't work that way still with some things. You can't. So, yeah, I think if you can take some nuggets from these sessions, then yeah, cool. I'll bill you later. No problem. I'll have a beer. Right, what's going on here? It's 2:10. We won't get a movement on gold until 20 minutes from now. So I think we'll just hang on for the US Open. We'll hang on for the US Open. We'll trade that for about 15 minutes or so, and then we'll see what happens after that. Does anyone want to cover anything or look at any charts or anything else whilst we're waiting?
And those wick ranges are huge for the last 2 candles.
Yeah, that's good. Tried, failed. Tried and failed.
Yeah, I accidentally clicked buy on that when we did that, but I had a 0.5 lot, so it's all good.
Yeah, it's all good. Are you still in the buy? Not so good.
No, I
No, I'm kidding. Yeah, the minute you did it, you thought, "Ah, shit," and you closed it, and it's like, okay, no worries. Yeah, let's see. I'm interested in gold falling over. It needs to break 12, really. It needs to break this area. Where are these fibs on this range? Let's highlight these fibs. It's not a small range. Yeah, it's a 170 pip range almost. That's quite a big range. You don't realise that it is, but it is. It's 170 pips. Let me move these fib numbers to the middle so I know where they are, because I've got other fibs from the other ranges and it's all very messy. So put them there. So there's a 38.2. So we're looking at 1810. Looking for 1810, and then we're looking for, I can't even see that, but 1808, 1810, 1808, 1806, 1804. 1804 ultimately. If it holds here and drops. Anyone trading gold?
I'm waiting for the fib to break, like close under.
Yeah. Does anyone need any Anything? Anyone want to look at anything?
Take that trade almost the same time as you did. Just before.
Oh, okay, cool. Just wait and see what happens then. Okay, so we've tried to go up on the 1 hour chart. We're trying to break momentum here on the 1 hour. 44 minutes in, 44 minutes to go, so it's still quite a long time. The trend is still very bearish, and so we're just waiting to see if we're going to fade here and continue to drop and maybe test at 1800, and then maybe try and make a new low. It does do this. This is price action. We have exhaustion. We've had a really strong bearish move, strong few days, so understandably things are going to slow down. Price is going to slow down as it arrives at a key area. 1800 is a key area. We said it was, we knew it would be. So now we're in consolidation phase. But these consolidation ranges, when they're like this, because it's been such a mammoth move down, the retracements are quite nice. 170 odd pips to the upside, that's quite a nice range to play in. So if you're scalping for 20 or 30 pips, you can do that. It's quite nice, as opposed to usually scalping's like 2 or 3 pips. So it needs to break 12 still, it needs to break this area. Can't look at the hour because we're only 40, how many minutes? Well, we still have 43 minutes on the clock. So the hour doesn't count for anything, and there's still a possibility that that breaks long.
Uber Eats is saying my breakfast arrives at 9:30. That's not a convenient time for it to arrive.
Get one of your staff to handle it. Get one of your staff to eat it for you as well, or maybe cut it up for you and feed it to you while you're trading.
I am the staff, like.
What? You mean all the millions you've made from trading? All this money you've made from trading, you haven't got staff?
I've made negative 3,000 from trading.
You're what? Negative 3,000?
Yeah, from when I first discovered it to now,
Right.
which is only a year, right?
Okay.
But I haven't been in it actively enough.
Okay. Martin's here. Everyone, Martin's here. Quick before he disappears again.
No.
Dr. Martin's in the house. How are you?
I'm good, buddy. How's things? How's
Yeah.
lockdown?
Yeah, you know, it's
You're a bit tired of it now, aren't you?
a little bit, yeah, because I've tried to be constructive in doing these sessions and sharing a bit more on our.
Yeah. I've been watching all the videos and
Yeah, well, I finished trading for the month a little bit earlier, so that was good. So I finished last week.
done well, so
Yeah, that just focus on. Yeah, that's it. So I thought I'd give some time to this because can't go to the gym. The weather's crap. I've been out once maybe to do some exercise. Went to the like the park and yeah, you know. How are you over there?
on one of your videos I thought I heard seagulls. Were you down in Margate? Or?
Yeah, I've been down the coast. I've been doing stuff like that. Definitely getting out and about to go down to the beach holiday home, beach home.
Yeah, nice. Yeah, that'll be good.
Yeah, the weekends are good for stuff
Great
like that.
videos, by the way. Great videos. I've just finished watching Rob's videos as well.
I've been talking about Rob all day today. I've recorded this and in there is all about Rob's strategies and how he scales in with using the fibs and things like that. And
This is a guy that I don't know.
Few-
You started this about a month ago. He was asking all sorts of questions and soaking us all in and
bit
just
frustrated.
making the best of everything.
Yeah, so that's what I said as well.
He put a really solid strategy together.
I know, right? I said this. And
Fantastic.
yeah.
I mean, to go from where he was to passing the FTMO challenge, wow. You know? But, yeah, he hasn't had to go through the baptism of fire that you and I went through for years and years.
Well, yeah, we'll see, because obviously we're talking about. I think a lot of people said this as well. I'm probably thinking sustainability, being consistent. So
Absolutely,
he,
consistency. Every
yeah,
strategy works.
yeah,
Every strategy works
yeah.
as long as you're consistent. But we're humans. That's the problem.
Somebody messaged and said I think he needs some order to his trading to be able to hold on to the FTMO. I think that's a fair point. I think he will be aware of that as well. And
I think he'll only improve, but
yeah,
he's obviously been listening
yeah, yeah.
quietly. He's a quiet guy. He's just been sat in the background listening to everything and soaking it all in. And he's found his method. That's great. If
Yeah,
he has.
exactly. He's put stuff to good use and he's doing it. And do you know what I really like about his ideas and his discipline is that he'll trade a session and he'll be done. He says he doesn't want to trade for too long, past 12 o'clock midday for him. He gets up
Well,
super,
that's why
super.
we do this.
Yeah, that's exactly what I was saying to everybody. Get up super early and he does what he has to do so he can finish early. And then he's got a strategy where he scales in little bit by little bit, but then he goes up to 76.4 and then that's when he'll put his bulk of his position on if it gets that high. And I thought that's it's sensible, isn't it? And he puts his stop just above, and so
It's funny
yeah,
because I've never thought about weighting my positions like that.
yeah,
I've always put equal positions on as part. I might put 5 positions on, which all add up to 1%.
yeah. He's going to come in. He's going to
Weighted it.
yeah. He's going to come in. He's going to come into the group now and talk and maybe say hello. And yeah, we'll get him in. No, it's good actually.
Props to him and props to you. Great videos, good educational videos.
Yeah, they're all right. I mean, again, probably need a bit of polishing up and presentation needs to be perhaps a bit more on point. But I think we can get the message across and share a few ideas and this is how we do it. And yeah, we've just been shorting gold and we're just shorting now. And we're in a short now on gold. Well, I've got some shorts on from the week still since Monday.
Since the initial drop.
Yeah, pretty much. Are you doing anything? Are you on anything?
Not really. I've just come back to the charts. I've been making the most of the weather, golfing. I'm doing a bathroom here now.
Oh, okay.
Getting my house ready we've had some snow, so just getting ready for that. Make sure I've got everything done outside. So yeah, now I'm ready to concentrate on the trading again. I did very well over the elections, so there's no great worry about needing to make money.
It's so cold outside.
Yeah, it's not too bad here. I'm actually playing golf on Sunday.
Where are you from?
Just outside Toronto.
Oh, I'm from Guelph.
Oh right, yeah.
All these dodgy Canadians, eh?
Playing down in Hamilton on Sunday.
Oh, okay.
I go to uni in Hamilton.
Do you? I've been to Hamilton twice. I've got friends living in Hamilton. Yeah, I've got friends there. Gold's dropping. Hamilton's alright, isn't it? It's not a bad little place. Okay, so we need to hold below 12, so that's cool. So you see where it's retraced 50% at 16. That's why we shorted there initially. Took a scalp. Now it's faffed and it's trying to push, trying to break down. 36 minutes for this hour, so anything can happen here. It can still change. That'd be good if it stays bearish. I want to see 1800. I want to see 1800 properly tested. I want to see 1800 broken, and just then it can do what it wants after that. But get down there, and that would be nice.
I wouldn't be surprised if we end up with an inside daily candle.
Yeah, I mean a bit of consolidation, and that's it. But that's why I've been shorting and repeating and scalping, and just not been too heroic with it today. There's no reason to. The scalps have been great, 20, 30 pips each time. Just because you put the trade on, you look at it for a moment, and it moves, and then you close it, and it's like, wow, that didn't have to wait too long.
That's why gold's so addictive.
Well, it is when it does big moves like this, and it has a massive range.
It was always going down after that big move on the daily where it took out the highs and then it just shot down. It was always going to head down from there.
Yeah, exactly. Anyway, don't do anything. Don't do anything that Rob does because he doesn't know what he's doing. He's a bit. Oh, sorry, Rob. Sorry, mate. You there? Ah, you
Just
there?
finished watching your videos, Rob. Excellent, excellent. Well, props to you.
Yeah.
Oh, thanks.
Yeah. Rob's with us. There you go.
Yeah, I actually, I'm done training for the day.
See, I told you. That's his discipline. Come in, do a bit, done.
Yeah, no. Well, I'm up 2.6% on the day.
Lovely.
So it's a beautiful day.
What did you trade?
UJ short
Let's have a look.
and Euro GBP long off the fibs.
Okay, cool.
Beautiful.
So there's UJ.
I love this transformation in you, Rob.
The minute I pass, I'm going to rent a Lamborghini. I'm gonna put 20-year-old forex trader in my caption bio, whatever.
Yeah.
Telegram signals link in the bio.
Yeah.
Price it for like $60.
Yeah.
Maybe sell a course.
Yeah.
I saw some pretty funny stuff not too long ago. It was a guy. He was driving a Hyundai Sonata, and some girl walks up with a camera. And she goes, "Oh my God, nice drive. What do you do?" And he goes, "Forex." And she goes, "Oh really?" And he goes, "No, I got 4X's, and child support's killing me."
That's funny.
Okay, I thought it was pretty comical.
That's hilarious.
I haven't seen you in a while, Martin. How are you doing?
I'm good, buddy. Yeah, I've just been making the best of the weather, golfing, and getting the house ready for the snow.
You guys are still golfing? Man, we've had like blizzards and like 22, and we had like a foot and a half of snow.
Yeah, we had a big snowstorm on, I think it was Sunday.
I heard. So
Jeez,
we went into lockdown like you guys yesterday, so it's always exciting.
Yeah, we're not in lockdown.
You're not?
Really?
No.
Ours starts on Friday. We announced it yesterday, but it starts on Friday.
Are we not in lockdown? I thought we started in the November 23rd.
The funny thing is, lockdown is about, well, it's in Peel, so it's about 2 miles south of me. So
2 miles.
Yeah, we're just outside the lockdown area.
So, Rob, what did you do with UJ? How did you trade this? What time frame did you use?
15 minutes. We go on to 15.
Yeah, 15. Okay.
Yeah, and we just do a fibs and do a couple shorts in there.
Okay. And that's it. Did you scale in like you've done?
I did, yeah, I did. I took multiple positions and then I kind of just let multiple positions go as they went into profit.
Did you trade this part of the move like
Yeah, the very last part. Yeah, we drew a fibs on that. It kept making so the highs weren't getting higher and the lows weren't getting higher. So to me, that was a downtrend. I thought a short was a good move off the fibs, and yeah, we're out of it now. I got what I needed out of it.
Okay.
On gold, I think I don't know, I just got a feeling we might have a little bit more of a retracement yet.
Up.
Before we make the final move.
Oh,
Yeah.
down or up? Up.
Well, I think we might retrace a bit more of that move down a little bit. I think we might go up to sort of the 50% and then down of the
Yeah.
last move.
Cool.
And gold and I have a love-hate relationship.
Well, I said to the guys, to the team here, that we had reason to trade it last week going into this week because of the fundamental news. The vaccines come out, so banks have to move their money around and they're going to take their risk off the table with gold, cash out their profit at the highs. And if you had like 100 million in the account invested in gold as an investment bank, you might take 50 million off, or you might even take 70 million off and leave 30 million in case things become quite bad in America with the economy. But there's always the opportunity then to buy it back up at a much cheaper price, and so you have to think like that sometimes and just understand how the banks would think and how they would do it. And so that's why we took a position up here in the 70s, waiting and anticipating the break of 1850. Yeah, so it's no good getting in down here. It's nice to get in and wait. And I said, even if you were here on Monday and you got this position on and it started breaking, you could just take it down. But just to be ready, really, because people were saying, how to trade gold, and it's very volatile. You need big stops and whatnot. But sometimes you kind of know what's going to happen because of the fundamentals.
Interesting to see
If we
if
break 1800, sorry, Martin, I didn't mean to cut you off.
sorry.
If we break 1800, what would the next target be?
1726. Yeah, there you go. 76. I got 1726.
I think if the Dow starts to drop big time, I think gold will plummet initially.
Market's just opened. Dow just flicked off 30,000 down to 29,950. It's just spiked down 50 pips in the first minute so far. Still going.
Yeah, I think the deeper it goes, I think the more people start to get margin calls and be selling the gold.
I know. Have you guys been paying attention to Bitcoin? I think it hit
Oh yeah, it's crazy.
400.
Yeah. So
It's gonna
yeah.
break that high.
Yeah. Well, we were talking about Bitcoin as well, saying about how it is behaving in the same way that gold has behaved this year, where we went round and curled up and broke the 10-year high on gold at 1921, and then stabbed up to hit 2000. It's the same principles now applying. The 3-year high from December 2017 was around 19 something, isn't it? So we knew it was going to stab up and make a new high and hit 20,000. That was similar price action to similar price action to gold, really. Let's zoom out of gold, and you'll see if you pull up a Bitcoin chart and a gold chart, they're very similar. Not much in it. And I said it's always a good idea to look at, when we do the top-down analysis, I said it's always good to look at what the institutions look at. So look at the quarterly, monthly and quarterly. So October last month was the start of the quarter, the last quarter of the year. So it's good to look at what's going on, bigger picture. Sometimes it will give you some ideas of what's happening. So there we had 1921 on gold, and here this monthly candle is a really nice reversal candle, really strong. And the catalyst for that was the vaccine news from the other Monday. And we've had every Monday, so every Monday's been a really good Monday. We've coined November, the Mondays have been massive move Mondays. It's just been Mondays a day to trade. It's make your money on a Monday. Money making Mondays, it's just whatever you want to call it. It's been really good. So we've got this bearish momentum. And I just think if it can break 18, then we can get to that retracement, a proper 38.2 retracement.
I suppose it's had a pretty bullish year. It's gotta come down at some point.
Well, yeah, I think like I say, the catalyst was was that really. It was to do with the vaccine. That's good news. You don't need to be hedging such bad things. There's always stuff going in the news about how bad this, that, and the other is, but yeah, things aren't that bad now, are they? Vaccines actually are positive for gold. So,
I'm surprised where gold retraced back up to say 1821-ish.
yeah, let's have a little look at that. Let's drill down to 15 minutes. Let's have a look at
Big nice
gold.
sell.
So it's So yeah, we've been scalping these moves since yesterday, taking some nice little ranges. I've still,
It doesn't take it to move much, and you've got your money for the day.
yeah, I'm still holding a short from 1834, and the stops at 1823. So it's locked in. Actually, no, it's not locked in. Locked in 110 pips. I think I said locked in 210 pips, but it's locked in 110 pips.
You can take any blip on gold at any round number, any fib level. Usually that blip is enough to make money.
yeah, it's pretty decent. But November's been good anyway for everything and anything. There's been some very, very good price action, very good movements. I've been sharing a lot of stuff. There's been a lot of good things happening. I haven't taken half of it, there's not really been a need. But we still had the best month of this year. It's been incredible. So
Yeah, you kind of hit your targets this month, didn't you? I think you made like 50% or something, didn't you?
yeah, I bagged like 38% in 1 week, the second week of November. Just trading, predominantly trading like the Dow and gold because of all the vaccine news. So again, it's because of certain, sometimes you have these events in a year, the stars are aligned and things happen, and you can't help it, but you'll capitalise, won't you? You'll make money, and it's just the way it is, and that's the good thing about this job. And I said, if you make 50% on a large account, so say you had a 100k account from the FTMO and you made 50 bags in a month, then you basically could take, I don't know, you could take the next few months off. How does it work with FTMO? Do you have to trade every month?
10 days.
Yeah, I think you have to meet the minimum 10 days. But I was looking at the platform on their YouTube channel. After they monitor your first 10 days, when you become a funded trader, I don't think they track it anymore. Like every time you withdraw, I think the 10-day thing is like renewed. So if you have like buffer,
Yeah.
then they don't do it over again. They just push your payment period.
So if I had 100k and I made, in November, I made over 50k profit, I would like to then say, right, I'm going to take December off, because that's what I'd like to do now. Take December off and enjoy Christmas, New Year, and not have to worry. And so surely you could speak to them and say, well, what do you need me to do for that? I'm not going to take the account from you after making 50G, are they? What? This,
Well, they're pretty quick to respond.
yeah.
I'm sure a guy could email them when they tell you what they need out of you.
Because I was saying, to be a trader and to enjoy life a little bit, when I was single, I said I was travelling and I would just have 2 laptops and prop up to a bar somewhere on a beach and do some trading. But I'd maybe just trade key events, high probability stuff and non-farm payroll, something that was happening. And so I wouldn't always be trading. And then I would just top up whatever I was making. So then if I made some good money, I would live off that profit for a few months. And I would say, okay, I've made 50%. Now I'm going to divvy up. I'm going to spend 5% of that every month. So for the next 10 months, I don't have to work. I don't have to trade. Now, if I want to trade, it's no pressure to trade, and it's completely discretionary. And if I want to just top up a little bit here and there, oh look, there's a bit of trading, there's a bit of a setup, I'll take a bit then. You know what I mean? And do that. And that's the kind of mentality that you'd like to have, as opposed to being a slave to the markets and always having to trade, always got to sit here and trade every session and be bored and boredom trading and just feel addicted to it, and it's just swing the other way, and you might think, God, I can't do that, or I'm not mentally in that position to do that yet, but you can make it happen. It's just natural progression.
It's pretty crazy when you start trading with rules and you start setting boundaries.
Yeah.
Where less becomes more.
Yeah.
Like I don't know how many times I screwed up where I just kept getting back in the market, and when the secret was not to be in the market, just sit there till your trades come to you.
Yeah, that's
You're at risk when you're in the market.
Yeah, and you know that, don't you, from the saying where they say if traders learn to sit on their hands and be patient 50% of the time, they'd be more profitable and make sense.
You're being paid to wait, as they say.
Yeah.
Like I throw out all my trades, I set all my alarms. When my alarms start going off, I start taking positions.
Absolutely, I thought that was a great idea. I like the way you weight your trades as well, so you have the bulk of your trade right up where your stop loss is the smallest.
Rob, you have fans.
No, it's something I'm going to adopt.
You know what's funny? I made these YouTube videos and I was like, I bet you no one's even gonna watch them, and people actually went and watched them. I was kind of surprised.
We got one
He's
extra
so funny.
subscriber this morning.
Oh, good, nice.
Does anyone have any questions for Rob or Martin? Does anyone have any questions? They're not going to be around forever. They're going in a minute, so they're not going to be around forever.
Gotta be quiet.
Rob.
My wife is working all right.
Oh, okay.
Hey, what's up, man?
You wanna be you wanna be my fund manager?
Fun manager? I don't know. I don't know about that.
That's like the biggest like thing right now. People like fake accounts are going in the comment section of like forex videos and are like, oh, this and this, help me manage my account. I'm making 500% a week. Like,
I've
and
been
then
I had somebody was advertising girls in the comments. I couldn't read the writing. I'm not sure where it was from, but yeah, people like doing that. It
Yeah.
was pretty interested how many girls were interested in me. It was very close to me too, even though I couldn't read the language. Yeah, no, actually, I was talking to Chris yesterday, and he said somebody joined the Discord and messaged him and asked him if he wanted to be FTMO for him. And Chris was kind of like, well, you know, the purpose of the group is so you can kind of educate yourself and do it yourself. And the guy was like, well, we already have 113 accounts. You know, you can just sit back, collect profits. And I don't know what ended up happening with that. I don't imagine Chris agreed to it. But there's some strange people on the internet.
He said no thanks, and then he passed on the message to me, and
Oh,
and I had a chat with this guy, and just to get a feel for what it is that he was thinking, and yeah, no, I don't know, nothing's happened, so nothing's happened yet. We'll see. I'll keep you posted. It's interesting,
this group
but
has
you
been,
never know if people are legit or for real. So yeah, just
yeah, it's kind of like take everything with a grain of salt. But
yeah.
yeah, this group's been really good because like you've actually been indirectly mentoring me, Alex, because I've been taking all your posts and you know I wrote out my trading rules. I printed out that trading demons chart,
Did you
and
did you do the demon finder? That's a good one. That's funny. That
I did, and I actually well yesterday I made my psychology video there on what I did yesterday.
I haven't watched it yet. I have to watch it. It's there to watch. I did share it with the group here.
It's yeah, it was basically me not following my rules and doing gold scalps when I'm not supposed to scalp. And yeah, I paid the price for it. But since I implemented trading rules and kind of most of the days I stick by them, and the days I stick by them, they're very good days.
Yeah.
When I stop following my rules, they turn out to be not so good days.
It's very easy to get bored in this business. That's the problem. When you start looking at gold scalps and stuff like that.
Yeah, and
Yeah.
yeah, I had no reason to scalp yesterday, but I did, and then I had to get back in the market to make my money again. And I ended the day with 261 in profit, but that wasn't the point of the video. The point of the video was I had no business to keep trading.
Yeah.
So
And
your alerts on TradingView, do you have them set up to alert you on your phone as well?
yeah, they're on my phone, they're on my pad, they're on my laptop. They're probably going to be on the old lady's phone soon. You know, they're making alerts.
Do you have an old lady? Wow.
Yeah. Well, I've had the same one for 6 years. She's
Wow.
old, but you know that.
Wow.
I can't have one
Does she
for
wear
longer
people?
than 3 months.
How old are you?
19.
Yeah,
Oh,
exactly.
that explains it.
Good man. Good man. That's good. 3 months. That's enough. You're 19. What, do you want to get
Three
married? What's
months of
wrong
my
with you?
life is like
An
3 months
eternity.
of my life.
Yeah, it's a massive portion of your life. At 19, 3 months is like 50% of your life. So you know what I mean? It's just, yeah, huge.
Yeah, and 25-year-olds you consider old.
Yeah, exactly. It's
Yeah,
quite funny.
it's 50% of my life. It's hitting the retracement and then it's gonna fall back down.
Actually, find yourself a 25-year-old lady. That'll be
Yeah, of course. It'll
and
balance it out.
exactly that will be an experience.
Get yourself a
How
trigger
she can
body, man.
handle.
It will help you. It will help you to grow.
Oh right. I go on Tinder. I need to compound my account.
Tinder.
See, Tinder happened after my time. I never got on that. I think
Yeah, good
I
idea.
think Tinder became a thing right around the time Surge dated, and I was
Oh,
on that.
okay.
So I missed the Tinder. But I heard lots of good things about it.
Did you?
And
Like what?
It's
well,
terrible.
It's got people like you be on there because it's terrible. Come on. I mean,
Apparently, you just swipe left and right, and eventually you get matches, and then you just pick the girl up, do your business, and you don't talk to her again.
Oh,
yeah,
all you need is a picture of you posing in front of Orlando, and that should get you like
yeah,
matches.
yeah.
It's very superficial. The whole app.
Rob will be alright. He's got nice hair.
I do, and I could take my shirt off, flex, we'd be good to go.
Can you? Oh, there. That's scary.
Yeah, yeah.
Okay.
It's funny because they were announcing these rules for lockdown, for the lockdown that's starting on Friday, and fitness classes are closing, but the gyms are allowed to remain open at 25% capacity. So I was just like, well, I wonder what that looks like. So I called my gym yesterday. I was like, so like, what's going to happen with the 25% capacity? Like, oh, we're only allowed 100 people in here now. I was like, well, that's kind of nice because I've never seen over 50 in there. So
Yeah,
hopefully
that's
it makes
cool.
it for us that way.
Yeah.
I think the restaurants you can only go out with people from your household. I believe the kids are done school for the year and it's all virtual now.
So yeah, our schools are still open, and we will come out of lockdown next week. I think next Wednesday, and so the gyms will open again. I'll be able to start going again, and yeah, it'll be good. Yeah. So
We'll see what happens because our 2-week restrictions were supposed to end this Saturday, and yesterday they announced that there's lockdown coming. So I don't know. I'm kind of expecting a bigger lockdown before this lockdown is over, like a national one for Canada. Because I don't know if anyone's gonna do it. Our leader will.
he has nice hair
I
though.
don't know. I think Trudeau's a bit of a pussy to do that. Actually,
Oh, I do not. He's liberal as fuck, man.
no, like he was kind of pussy like the first time around. Maybe he's like gained some wisdom from that. He's definitely aged from this coronavirus.
You do. All leaders age when they get to these positions of power. They all have grey hair. It's amazing. I'm shorting here. I've just shorted another quick cheeky short off 16 right now on gold, just a double top at the 50. So it's just a quick one. And we'll just see if we can stops just above. We'll see if this one actually breaks or fails this time.
Yeah, I think it might take out that double top. It's too inviting.
Yeah, maybe 12 minutes as well. So it's quite bullish still, to be fair. But you never know.
Has anyone kept up with the U.S. election? Did they figure anything out yet?
Yeah, Biden's won.
Is that official?
Well, yeah,
there's still some counting going on.
oh, yeah, but he's the admin. Trump's administration have been very obliging and have been helping do the transition.
Biden's status as president-elect, and I guess they changed it back to politician.
Oh yeah, I heard that as well. I don't know. I've got short on here though on gold. I'm going to take another one. It's a small position at 15.86. I've got in it. So 15.86, and I'm going to just see if we get up to that. I'm going to do a rob and just scale in with a big position up here, 25 to 30 area for a short.
Where would you put a stop loss?
Stop losses will be up here about 30. And on this one, just going to wait and see what it does on this candle. My stop loss is about 25 at the moment, which is 76.4. But I don't want to put it on that. I want to put it just below. I'm going to bring it down in a second. Just want to let this price action kind of play out and see if it stalls at this area. I think 50% would be ideal, and a bit of a pump up. I'd like to see it just find some resistance here and then just curl back down again. And just scalping really for the moment until such time that we do any sort of bigger move, which I think will happen, but which way it's going to go I don't know yet. But I'm going to go, and I need to go and sign off and go and get my son actually, because there's nobody around here today. It's just me. So I said I was going to go and pick him up and take him out and go and have a pizza, because obviously we can get takeaways and things like that. So I was going to go and grab a pizza with him and do some stuff.
Got a date planned later today of watching some of your videos. I think I'm interested in sharing some strategies today.
Well, we'll go and have some. I'll sort him out with some food, and then leave him with my wife, and then we will, and I'll come back and sit and see what's going on. But yeah, so I'll
I'll see you guys later after I get off too. My
Yeah.
food's done as well. So,
yeah, no, really good.
yeah, you guys take it.
Yeah, nice. It was good to catch up. Actually, it was good to speak to everybody, and nice to see Martin as well, and speak to Martin. And yeah, good. All right, I'll talk to you guys in a bit, and
Cheers, Alex.
yeah, I'll be back in a little while. I've still got a big trade on as well, so I'm still short from 1834, but the stop's at 23, so I've still got 110 pips locked in on the one position that's left. But I was saying I've done loads before and during and after, so that's just going to help buffer this if this one turns into a loss. That's why I've been taking them, not really bothered. It's about risk management more than anything. So yeah, there you go. Probably end up with like if this all comes into fruition, I'll end up with a 60% month or something ridiculous. It'll be phenomenal. I think we're probably floating at around 53, 54, 55% maybe. I don't know. Yeah, I think I bagged another 2% between yesterday and today. So it's been going really, really, really well, and that's just trading gold, and because of this phenomenal move. So yeah, there's no harm done here. Yeah, okay, good. I'll talk to you guys in a bit. And shall I shut this down? Or I'll leave it open. Anyone can shut this down. I'll just mute my mic and I'll talk to you guys later. Right. And I'll keep the screen going and just see what happens. All right, talk to you later. Bye.